So far we have come across meaning of goods, meaning of services, and meaning of consideration and meaning of business. Now have a look into meaning of person. So person under GST is same as person under Income Tax Act except central government and state government. So central government and state government is not a person under Income Tax Act. So which means they are not required to pay income tax, but they are required to pay GST. So therefore person under GST includes central government, state government. In addition to that, other persons under Income Tax Act like individual, HUF, AOP, BOI, all those are also included in GST. Then next, meaning of various supplies you can see. We have taxable supply, exempted supply, non-taxable supplies and zero rated supplies. These are the 4 supplies. Zero rated already we know. What are zero rated supplies? Export of goods or services, supply of goods or services to SEZ is known as zero rated supplies. What are non-taxable supplies? 2. Alcoholic liquor for human consumption and petroleum products. And what are exempted supplies? Exempted supplies for payment of GST is 3. Notified as exempted, nil rated and non-taxable. These 3 are treated as exempted. So come again, what are exempted supplies under GST? Notified as exempted. So government from time to time will notify certain transactions as exempted, that is notified as exempted. Nil rated means the rate of GST is nil. And non-taxable. So non-taxable already we know what are non-taxable. These 3 will come under exempted supplies. So the balancing figure is taxable supply, which means whether taxable supply includes exempted supply? No. Taxable supply will not include exempted supply. Why? Because exempted supply includes non-taxable supply. So taxable supply will not include exempted supply. You can see the chart below. So supply of goods or services, if it is chargeable to GST, that is GST is payable, then it will be called as taxable supply. If it is not chargeable to GST, why is it not chargeable to GST? Maybe it is notified for non-payment, or maybe it is nil rated, or maybe it is not at all covered. So which means taxable supply is the balancing figure. So it is a conclusion that we can draw from this. Taxable supply does not include exempted supplies. So one final time, what is the meaning of exempted supply? Notified as exempted, nil rated and non-taxable. These 3 are treated as exempted supply. So taxable supply is balancing figure. Now we have meaning of aggregate turnover. This aggregate turnover is important because some attempts they have given questions on aggregate turnover. So like what is the meaning of aggregate turnover? Just now we saw 4 supplies. All those 4 supplies will come in aggregate turnover. So what are they? Taxable, exempted, exempted includes non-taxable, then zero rated, that is exports, and supplies to SEZ. Supplies to SEZ is interstate supplies. So everything will come in aggregate turnover, and aggregate turnover should be computed state-wise on our all India basis. All India basis. Aggregate turnover should be computed on all India basis. And aggregate turnover excludes 2. 2 things will not come in aggregate turnover. What are they? So inward supplies on which GST is payable under RCM and CGST, SGST. Why inward supply will not come in aggregate turnover? Generally turnover means what? Outward supply, inward supply. Generally turnover means outward supply. So inward supply, even though you pay GST under RCM, will not be included in your aggregate turnover, means it will be included in whose aggregate turnover? Suppliers aggregate turnover. For example, you see this, A Limited is making supply to B Limited, which is covered under RCM. Supply under RCM. Okay. Supply under RCM. Then who will pay GST to government? B Limited. A Limited is making supply to B Limited, which is covered under RCM. Then who will pay GST to government? B Limited. Now this supply is included in whose aggregate turnover? A Limited aggregate turnover, B Limited aggregate turnover? A Limited aggregate turnover only. To whom it is turnover? To whom it is sales? A. So it will be included in the aggregate turnover of A Limited, but not in the aggregate turnover of B Limited. Then one more point, say Mr. A is having a 1% company, A Limited, A Private Limited, like that 1% company is there, 1% company. Now, some sales is made by A, which is 8 lakhs, and some sales is made by A Limited, 1% company. So, means only A is the owner, okay, and sales made by A Private Limited is 7 lakhs. Now, what will be taken as the aggregate turnover of A? What is the aggregate turnover of A? 8 lakhs. So, whenever we have this 1% company, don't include, we don't have clubbing provisions in GST. So, we should not include the other business turnover into that person's turnover. So, that A Limited, A Private Limited's turnover is 7 lakhs and Mr. A's turnover is 8 lakhs. So, this A Private Limited, even though he is the only owner in that business, even then it should not be included in Mr. A's turnover because we don't have clubbing provisions in GST. Same way, there is ABC and company in which A is a partner. A is a partner and ABC and company turnover is 12 lakhs. Whether we will include this 12 lakhs, A's share in A's turnover? No. We don't have, again we don't have anything like that. So, whatever is the aggregate turnover of Mr. A, that will only be taken. Is it clear or not? And what is the purpose of aggregate turnover here? Why aggregate turnover we determine? Mainly to determine the threshold limit for registration. So, whenever aggregate turnover of a person exceeds a threshold limit for registration, like 20 lakhs or 10 lakhs or 40 lakhs, then they are liable to get registered for that purpose. So, tell me what is the meaning of aggregate turnover? Come on. Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. Computed on what basis? All India basis. It excludes inward supply covered under RCM and it excludes taxes, CGST, SGST, etc. Then now we are moving on to classification of supply into goods or services. Section 7 subsection 1 capital A read with schedule 2. Schedule 1 is what? Schedule 1 71C activities without consideration. Schedule 2 is classification of supply into goods or services. Schedule 3 7 subsection 2 exclusions from supply. Now listen, once an activity becomes supply, then only we will classify it into goods or services. If an activity is not at all supply, we will not classify it as goods or services. So first we need to see the activity as movable property. That movable property, if there involves a transfer of title, then it will be supply of goods. That title can be transferred at present or it can be transferred at a future date. For example, I have a car. I give you the title to that car, which means it is supply of goods. This title I may give today or I may give at a future date. What is an example of transfer of title at a future date? Hire purchase or installment transaction. Today I am giving you the possession, but the ownership I will be transferring at a future date. Let it be, it will be treated as supply of goods. I am not giving you the title of the car, but I am giving you the right to use the car. Then it will be coming under supply of service. Understood? So, movable property, when it will come under supply of goods, come on, transfer of title. When it will come under supply of service, transfer of right to use. Then immovable property, will it come under supply of goods? No. Why it will not come under supply of goods? Because goods means any kind of movable property. So, immovable property not treated as goods. But it will come under supply of service. What is that? Bringing into existence an immovable property, that is construction, works contract, etc. And then transfer of right to use immovable property. I have an immovable property which I am giving to you on rent. So, means I am not transferring the title to the immovable property, I am transferring the right to use immovable property, that is also supply of service. Then intellectual property rights. What are intellectual property rights? Patent, trademark, copyright, etc. Permanent transfer of intellectual property right will come under supply of goods and temporary transfer of intellectual property rights will come under supply of service. A music director composing music for a particular movie and get some money from the producer, and that music he can even use for some other movie also. Now it is permanent transfer or temporary transfer? Temporary transfer. So that will become supply of service. Suppose if the same music director composes a music and gives it to the producer of that movie, and he cannot use that music to any other company or any other movie or any other production company, etc. Then in that case it will be called as permanent transfer of IPR. Permanent transfer of IPR is treated as supply of goods. Then carrying out process on the goods belonging to other person. Listen carefully. I am a tailor pa. You give me cloth. I do the stitching and I return you the garment. Now the major material is what? Cloth. Who gives that cloth? Recipient. So therefore it will be treated as supply of goods or supply of service for me? Supply of service. Because the major substantial material required for the process is given by the recipient. Supplier just adds some material like what? Thread, then buttons, etc. he will add. Just because supplier is adding some material, will it become supply of goods? No, it will still be supply of service, because the major material required for the process is given by the recipient. Some places what you need to do is that you need to go to that shop, buy the cloth there, then only they will do the stitching. Okay, you need to buy the cloth there, they will do the stitching. Say for example, you are coming to my shop, selecting the cloth, and I am only doing the stitching and giving to you, but some extra material required for this you have given, some extra hangings, danglings, etc. and all. Now in this case, substantial material, who is supplying? Supplier. Therefore it will be treated as supply of goods. So therefore the classification is simple. Carrying out process on the goods belonging to other person, whether that is substantial material given by the other person or minor material given by the other person. If substantial material is given by the other person, it will be treated as supply of service. If only minor material is given by the recipient, but major material required is purchased by the supplier only, then it will be treated as supply of goods. As per contract, supplier should purchase those goods and process the same, and some material is given by the recipient, still it will be supply of goods. Suppose as per contract, recipient should supply those goods and supplier should carry out the process on those goods, then it will become supply of service. Then next, supply of goods along with services, means in a transaction there will be both goods element as well as service element. If it is notified activities, it will always be treated as supply of service. What are they? Works contract. Works contract means what pa? A contract involving both goods and services in relation to an immovable property. That is important. In relation to an immovable property against a single consideration, then it is known as works contract. Simple. So I am one builder. You are asking me to do construction of one property. So now I will only buy the material required for construction and I will do the construction and I will hand over the property to you and I collect some consideration from you. So therefore it will be treated as supply of service. Even though it involves both goods element as well as service element, it will be coming under supply of service. That is works contract. You can see below the meaning of works contract. A contract involving transfer of property in goods as well as services. So in works contract there will be both elements, supply of goods as well as supply of services in relation to immovable property. So it should not be in relation to movable property, it should be in relation to immovable property. For example, so you purchase one mobile phone and that mobile phone, it slipped out of your hand, it fell down, it got broken. Now you are going to the repair shop. Now they will only supply the screen, that is goods. They will do the repair, service. Is it works contract? There is both goods element and service element. No. Why it is not works contract? Because it is not in relation to immovable property. Got it? So therefore the works contract should always be in relation to immovable property against a single consideration. Then it will be treated as supply of service. Okay. Then so that's the reason why while discussing sale of flats I told you, when part consideration is received before completion certificate and remaining after completion certificate, or entire consideration received before completion certificate, it is covered under supply and it will be treated as works contract service. Then software. In software, what is goods? Software can be in the form of goods or software can be in the form of services. There are some softwares which is sold like goods, like antivirus softwares or OS or Microsoft Office, etc. and all. Even though it is sold as product or goods, or it is developed for a particular person, that is developed software. So whenever I need a requirement, based on my requirement, one software will be developed. So let it be developed software or ready-made software, whatever it may be, it will always be treated as supply of service. Then supply of food. In food, what is the goods element, pa? Food. Whatever is the materials used in the food is the goods element, and cooking is the service element. Even though food contains both goods element as well as service element, but it will always be treated as supply of service. What are the three notified service that involves both goods and service which will always be treated as service? Works contract, software and supply of food. Apart from these three, any other transaction, if it involves both goods and services, how we need to classify? We need to check, is it a composite supply or a mixed supply? What is composite supply, mixed supply? Little later we will discuss, but say if it is a composite supply, if the principal supply is goods, entire transaction will be treated as supply of goods. If the principal supply is service, entire transaction is treated as supply of service. For example, AC and installation is composite supply. Why it will become composite supply? Little later we will see. So, but it is composite supply. Okay. So, what is the principal supply here in AC and installation? What is the principal supply? Main supply AC and installation is ancillary. Main supply is supply of goods or supply of service? Supply of goods. So, entire transaction will be classified as supply of goods. Same way, coaching plus study notes. Okay, coaching plus study notes, study materials, but these are not published. Okay. So, these are actually composite supply. Why it will become composite supply? Later we will see. It is composite supply. What is the principal supply there? Main supply, coaching, and study material is ancillary. Therefore, what is the principal supply? Goods or services? Service. So, entirely it will be treated as supply of service. Then, suppose if it becomes mixed supply, and if the highest rate supply is goods, entirely it will be treated as goods. If the highest rate supply is service, entirely it will be treated as service. For example, TV plus optional warranty is mixed supply. TV is say 18%, optional warranty is 12%. What is the highest rate? TV. So, TV is goods. So, entirely it will be classified as goods. Same way, video lectures and pen drive is mixed supply. Say video lectures 18%, pen drive 12%, highest rate is what? Video lectures, which is service. So, entirely it will be classified as supply of service. Is it clear? Therefore, whenever it is composite supply that involves both goods and services, that is composite supply, principal supply is goods, entirely it will be treated as goods. If the principal supply is service, entirely it will be treated as supply of service. And mixed supply, if the highest rate supply is goods, entirely it will be treated as goods. If the highest rate is service, entirely it will be treated as service. Apart from these five, any other activity will be coming under supply of service. Either doing an act, not doing an act, tolerating an act. Okay. Now, I am taking classes. I am taking class, say if it is supply, now will it come under movable property? No. Immovable property? No. Intellectual property rights? No. Carrying out process on the goods belonging to other person? No. Composite supply of goods and services? No. Mixed supply? No. So, any other activity where it will be coming? Doing an act, services. You understood? You are sitting and tolerating me. Now, where it will come? Again, supply of services. But first, is it supply? Are you getting consideration? Yes, you are tolerating my act, pa, but you are tolerating my torture. Yes or no? Yes, sir. Yeah. Class so, tolerating an act for which you are given a consideration, or are you paying a consideration? So, you are not paying any consideration, you are not getting any consideration, which means it is not a supply. When it is not a supply, we should not bring it into classification of supply into goods or services. Can you give me an example for consideration for tolerating an act? Consideration for tolerating an act. Example, contract you entered and the other person has breached the contract. You are tolerating his act of breach for which you are collecting some damages. So this will be coming under consideration for tolerating an act. It will become supply under 71A and it will come under supply of service. Okay. Then can you give me example of consideration for not doing an act? Huh? That's what example. Non-compete fees, correct. Non-compete fees, not to start a competing business. I will not do a competing business for which you need to give me some money, or you should not place the tender, so I will give you some money for not placing the tender. You understood or not? So these are all known as consideration for not doing an act. Again it will become supply under 71A, it will come under supply of service. Okay. So therefore the balancing figure will be doing an act, not doing an act, tolerating an act. Then we have meaning of distinct persons. Who are treated as distinct person? One registration of a person to their another registration is known as distinct person. When a person is required to get more than one registration, when a person is required to get more than one registration, if they are doing business in more than one state, so then in each state where they are making taxable supply, they need to get separate registration. Now say for example, I am doing business in Tamil Nadu and Karnataka. Now if my aggregate turnover in a year exceeds the limit, then I need to register. I need to register where? In Tamil Nadu as well as in Karnataka. Now between my Tamil Nadu registration to my Karnataka registration, if there is any transaction, that will be transaction between distinct person. Got the clarity? Now within the state, when I will get more than one registration, okay, if I am doing business in other state, I will get separate registration. Within the state, is it mandatory to get a separate registration? No. Within the state, if I have multiple places of business, either I can go for a single registration or I can go for a separate registration. If I go for a separate registration, then one registration to another registration will be known as distinct persons. Understood? So when a person is required to obtain more than one registration, see this, suppose if we are doing multiple business in different states, then separate registration with respect to each state mandatory, correct? Suppose if I am doing multiple business within the same state but in different place of business, separate registration with respect to each place of business, mandatory or optional? Optional. If I am doing multiple business, same state, same place, that is I have a single building. In that single building, ground floor I am doing one business, first floor I have a cinema theatre, second floor I have a food court, third floor I have a beauty parlor, like the different businesses, but in the same building, done by the same person. Can I get different registration for each business? No, cannot obtain separate registration, which means under single registration, can I do n number of business also? Yes. How GST department will know that? We need to give the HSN and SAC at the time of making application for registration. At the time when you make application for registration, what are all the goods that you are selling will have a HSN, Harmonized System of Nomenclature Code, that we need to enter. If you are doing service business, which and all service business you are doing, each services will have a SAC, so that we need to enter at the time of registration. So department will come to know that we are doing more than one business, still we can have a single registration if it is only one place. Got it? Now this is normal, but there is a special case here. Up to this you understood. So who are distinct persons? Come on. One registration of a business, one registration of a person to their another registration is known as distinct person. What is the consequence in case of distinct person? Why we should learn distinct person? DRIP. R is what? Related party transaction, including transaction between distinct person. So between distinct person, if there is any transaction, even though without consideration, it will become supply under 71C for that reason. For example, I have a head office in Bangalore, Karnataka, and I have a branch office in Chennai, Tamil Nadu. From head office to branch office, I am moving the goods. Actually, it is not a sale, just a stock transfer. But is it transaction between distinct person? Yes. Due to that reason, it will become supply under 71C even though without consideration, and I need to pay GST for that reason. Okay. Then, so if I have one registration in a state and another registration in the another state, or another registration within the same state, then it will be called as transaction between distinct persons. Now there is another point in distinct person which is very, very important. Say this. See this example in the next page. A Limited has started business in 3 states, Tamil Nadu, Karnataka and Telangana, and their applicable threshold limit is 20 lakhs. What is the aggregate turnover? Count everything. Count everything. Taxable as well as exempted. Both will come in aggregate turnover, and aggregate turnover is computed on all India basis. Am I right? Now count everything. 10 plus 2 plus 3 plus 4 plus 3. What is the total? 22 lakhs. Whether their aggregate turnover cross the threshold limit or not cross the threshold limit? Cross the threshold limit. Are they required to get registered? Yes. They are required to get registered. A Limited is required to get registered. Why A Limited is required to get registered? Because their aggregate turnover exceed the threshold limit. And tell me where and all they need to register. Tamil Nadu and Karnataka, but not in Telangana. Why they are not required to register in Telangana? Because they are not making taxable supplies in Telangana. So a person, once he is liable to get registered, they should register in each state from where they make taxable supplies. Are they making taxable supply in Telangana? No. Which means no need to register in Telangana. But even then, Telangana will become a distinct person. So even then, Telangana will become a distinct person. So Tamil Nadu to Telangana, is it transaction between distinct persons? Yes. So Karnataka to Telangana, yes. What about Tamil Nadu and Karnataka? No doubt that is distinct person. Say this. A Limited is having a GSTIN in Tamil Nadu. A Limited will have a GSTIN in Karnataka, but A Limited is not having any GSTIN in Telangana. But between Tamil Nadu and Karnataka, if there is any transaction, that is distinct persons. And Karnataka to Telangana also transaction between distinct persons. Tamil Nadu and Telangana also transaction between distinct persons. Now tell me what is the meaning of distinct person. Come on. One registration of a person to their another registration, or one registration of a person in a state and another establishment in the other state even though not registered. Even unregistered establishment in another state of a registered person in a state are treated as distinct persons. Clear pa? Sorry. Same way, I have 3 places of business in Tamil Nadu. Inside Tamil Nadu, say Chennai, Madurai and Erode. Like that 3 places I have place of business. Chennai and Madurai, I got separate registration. Erode, I have not obtained any registration because we are making only exempted supplies there. Okay pa? Now, will that become distinct person? From Chennai to Erode, if I make any transfer, will that become distinct person? No, no. Unregistered within the state will not become distinct person. Unregistered in the other state. Unregistered in the other state only will become distinct person. Okay, yeah? So, can you tell me what are distinct person? 3 points you need to tell me. When the transaction is called as transaction between distinct person. Registered, okay, registered establishment in one state to registered establishment in another state. Super. Then registered establishment in one state to unregistered establishment in another state. Super. Third, registered establishment with respect to a place of business in a state to another registered establishment in the same state. You understood? Only 3. Okay, registered establishment in that state. Within the state, another unregistered establishment, will that be treated as distinct person? No. So that is this. Consequence of distinct person, stock transfer or branch transfer. If it is interstate stock transfer, it will be supply under 71C. If it is intrastate stock transfer, whether they got a separate registration or single registration, you need to check. If they get a separate registration, then only it will be supply under 7(1)(c). Why? Because within the state it is optional now whether to go for separate registration or not. Suppose if they are continuing with single registration, then it is not a supply. Now we completed section 7 fully, okay, and we are moving on to section 8. What is section 7? Supply under GST. Now we are moving on to section 8, composite supply and mixed supply. So composite supply, mixed supply, what is the difference and when we will apply section 8? So please listen, concentrate. When there are two or more supplies naturally bundled in the ordinary course of business, so first there should be two or more supplies in a transaction. Then only we will be applying composite supply, mixed supply concept. For example, you go to a cinema theater and order for popcorn plus Coke as a combo for say 299 rupees. And this popcorn is having GST rate 5% and Coke is having GST rate 28%. So two or more supplies in a single transaction, yes or no? Yes. Then we will apply section 8. Three conditions we need to check. If these three conditions are satisfied, then it will become composite supply. If any of these three conditions not satisfied, then it is not a composite supply. Okay. First we are checking is it composite supply or not. Condition number 1. All the given supplies must be taxable. Satisfied? All the supplies should be taxable. Satisfied or not satisfied? Satisfied. And naturally bundled in the ordinary course of business. Is it naturally bundled or not naturally bundled? Naturally bundled means what? This is a place where in exam generally we get confused. Naturally bundled means one cannot be supplied without the other. That is known as naturally bundled. Means you ask for popcorn, mandatory you will get Coke. You ask for Coke, mandatory you get popcorn. That is naturally bundled. Is this naturally bundled in the ordinary course of business? No. Why? Can popcorn alone be sold separately? Can Coke alone be sold separately? When they are sold together, does it mean naturally bundled? No, it is not naturally bundled. So second condition, not satisfied. So therefore it is not a composite supply. Is it clear? First we are checking is it composite supply or not. It is not a composite supply. Why it is not a composite supply? Because it is not naturally bundled. Okay, then we need to apply mixed supply. For mixed supply only one condition. What is that one condition? Single price or not. Is it single price or separate price? Single price. Therefore it will be coming under mixed supply. Understood? As there is a single price, it will be coming under mixed supply. In case of mixed supply, we need to take the highest rate. What is the highest rate in this? 28%. So therefore this 299 rupees is taxable at what rate? Taxable at 28%. Understood? Then another example. Another example, AC is say 12% and installation is say 18% and 32,000 we have paid. Now check whether it is composite supply or not. Number 1, all are taxable. Three conditions. First condition, all are taxable. All are taxable. Number 2, naturally bundled in the ordinary course of business. So because even though we can buy AC without installation, but that is remote. Generally, usually, see, whenever you interpret that, we generally see, the exceptions, because we are known for that. CA, the moment we study CA, what we do, we see always exceptions. Correct or not? So, but we should not see here exceptions. Generally, in the ordinary course of business, the one who sell AC will do the installation also, na? Innapa. So therefore, in the ordinary course of business, you need to see even the exceptions will always be there. You understood? Exceptions will always be there, but we should not see that exceptions in the ordinary course of business. That is usually, generally, whether one will be supplied without the other, no. So usually AC means they will do installation also. So naturally bundled. Second condition also satisfied. Third condition, principal supply identifiable. Identifiable or not identifiable? Identifiable. What is the principal supply? Means main supply, predominant supply. What is the predominant supply? AC. So all three conditions satisfied. What are the three conditions? Please repeat. All are taxable, naturally bundled in the ordinary course of business. Principal supply is identifiable. Now we need to treat it as composite supply. When it is composite supply, we will take the rate of principal supply. What is the rate of principal supply? 12% and apply it on the entire transaction. So entire 32,000 is taxable at what rate? Is taxable at 12%. Understood? Then take another example. Say there is one shampoo brand. Okay. So they are making shampoo plus hair oil. Shampoo plus hair oil. Always they will be giving it as a combo. You buy shampoo, you will get hair oil. You buy hair oil, you will get shampoo. Like that, always together. And for a single price of 300 rupees. For a single price of 300 rupees. Shampoo is 12% and hair oil is 5%. Now, whether it is composite supply, all are taxable. Naturally bundled in the ordinary course of business. Yes. Yes. Just now I said, for if they are selling shampoo, they are also selling hair oil. Separately shampoo not available. Their brand shampoo separately not available. Separately hair oil not available. Always it will be sold as a combo. Means naturally bundled in the ordinary course of business. Ordinary course of business of that supplier we need to see. Is it clear? Ordinary course of business of that supplier. So naturally bundled. Then either principal supply identifiable? No. So we don't know what is principal supply. Sometimes shampoo will be principal supply. Sometimes hair oil will be principal supply. We cannot identify what is a principal supply. Of course, for me both are not applicable. Generally I am telling you. So therefore, what is predominant element here we don't know. And therefore it will be coming under not a wait. Wait. So first it is not a composite supply and thereafter only we need to check single price or not, and then it will be mixed supply. You understood? So don't rush. In exam, don't rush and complete. Okay. So nidhanama purumya. So first it is not a composite supply. Why it is not a composite supply? Because principal supply not identifiable. And is there a single price? Yes. As there is a single price, it will become mixed supply. So what is the highest rate? 12%. So entire 300 will be taxable at 12%. Is it clear? Next, one more example. Battery 12%, inverter 18%, battery is 12,000, inverter is 8,000, so it is sold for 20,000. Okay. Now in this case, first is it composite supply? Yes sir. All are taxable. First condition, all are taxable. All are taxable? Yes. Naturally bundled in the ordinary course of business. Supplier point of view you see, don't see from the recipient point of view. So because battery will not work without inverter, inverter will not work without battery, not required. Because you are seeing the usage. See from the supplier point of view. I am selling battery. If anyone is coming and asking, will I sell inverter also along with battery? No. If you ask battery, I will sell battery. If you ask inverter, I will sell inverter. So therefore, one can be sold without the other, which means naturally bundled in the ordinary course of business or not naturally bundled? Not naturally bundled. Then it is not a composite supply. Okay. When it is not a composite supply, then check is there a single price? No. Single price is not there. Then it is not even mixed supply. It is neither composite supply nor mixed supply. Then what it is? Individual supplies taxable accordingly. Means 12,000 is taxable at what rate? Taxable at 12% and 8,000 will be taxable at 18%. Taxable at 18%. Then whenever price is given separately, it will be individual supplies as her. No. No. For example, say this. AC and installation. AC and installation, AC is 12%, installation is 18%, AC 30,000, installation 2,000, then it will be individual supplies or no, because it will become composite supply. First, if it becomes composite supply, price can be single or price can be separate. So why it will become composite supply? All are taxable, naturally bundled in the ordinary course of business, and the principal supply is identifiable. Let the price be single or let the price be separate, the entire price will be taxable at 12%. So composite supply, whether the price should be single or separate, it can be single or it can be separate. For mixed supply, the price should be single. So if it is not a composite supply and there is no single price, then only it will become individual supplies. Clear? So that is the flow chart which you need to remember. See this. First you need to check whether there are 2 or more supplies in a single transaction. If it is no, section 8 is not applicable. If it is yes, then 3 conditions we need to apply. What are the 3 conditions? All are taxable, naturally bundled in the ordinary course of business, principal supply identifiable. If all these 3 are satisfied, then it will be called as composite supply. In case of composite supply, should the price be single or separate? It can be single or separate. Then once it becomes composite supply, what we will do? We will take the rate of principal supply and apply it on the entire transaction. Suppose if any one of these 3 is no, then we need to check what? Single price or none. If it is single price, then it will become mixed supply and we will take the highest rate on the entire transaction. If it is no, then it will be individual supplies. We will take respective rate for respective supply. So whenever you see some practical questions on application of this composite supply, mixed supply, you need to apply this chart and arrive at the answer. Or you may get a theory question like this. Distinguish between composite supply and mixed supply. So what is composite supply? 2 or more supplies naturally bundled in the ordinary course of business. Mixed supply naturally bundled or not naturally bundled? Not naturally bundled. Type of supply involved. In composite, all must be taxable. But in mixed, it can be combination of taxable or exempted or non-taxable. Price. How the price should be in case of composite? Either single price or separate price. But in case of mixed, it should be single price. And principal supply should be there in composite supply or not? Yes. But in mixed supply, principal supply is not relevant. What rate we need to take in case of composite supply? Rate of principal supply. Applied it on entire transaction. But in case of mixed supply, what rate we need to take? Highest rate. And we need to apply it on entire transaction. Now see this illustration 3. Next page. Laptop and laptop bag sold to a customer for 55,000. Now first, laptop and laptop bag, both are taxable. First we are checking composite supply. Both are taxable. Naturally bundled. In the ordinary course of business, yes. Usually, that's what. You are seeing always the exception. Please don't see the exception. Generally, you see. Generally, a person who sells the laptop will sell the laptop bag also. So, in the ordinary course of business, it is naturally bundled. Okay. Then, next number 3. What is the principal supply? Laptop. So, therefore, all 3 conditions satisfied, it is composite supply. In case of composite supply, which rate we will take? Principal supply rate. What is the principal supply rate? 18% and applied it on entire transaction. What is the value? 55,000. 55,000 exclusive of GST or inclusive of GST? Exclusive of GST. So how much is the GST payable? 55,000 into 18%. Suppose if it is given as inclusive of GST, what you would have done? Into 18 by 118. Simple. Okay. Then number 4. Supply of 10,000 kits at rupees 50 each, amounting to 5 lakhs, exclusive of GST, to Ram Fancy Store. Each kit consists of 1 hair oil, 1 beauty soap and 1 hair comb. Rate of GST for hair oil 18%, beauty soap 28%, hair comb 12%. Compute GST payable. First, all are taxable? Yes. Naturally bundled? No. If you go and ask for hair oil, will they give hair comb and soap also? No, na. So generally they will not be giving it together. They Induleka hair oil is there, pa. One applicator they will give. Now will that be coming? Will that be coming under waste, pa? Don't use waste, okay? So will that be coming under composite supply? Will that be coming under composite supply? Yes. Because for that hair oil, they will give that applicator also. Like one hair comb, if you apply like that, so that hair will come like that and all, they will cheat. But bullshit all these are. And so therefore, this applicator will be mandatorily given in every hair oil box na. Then it will be coming under composite supply there. But hair comb will they give? No. So therefore, it is not composite supply. Okay. Single price or separate price? Check the question. Single price or separate price? Single price. Therefore, it will be treated as mixed supply. Mixed supply means which rate we will take? Highest rate. What is the highest rate? 28% and applied it on the entire amount. That is 5 lakhs into 28%. But they have not given inclusive of GST or exclusive of GST. So generally all amounts in the absence of information in the question will be exclusive of GST. Only one place we will take the assumption as inclusive of GST. Which place? Interest. Interest alone is inclusive of GST pa, in the absence of information in the question. Otherwise all other amounts will be assumed to be exclusive of GST. So therefore it is exclusive of GST. So 5 lakhs into 28%, 1,40,000. Suppose if it is clearly given as exclusive of GST, we will take it as exclusive of GST. If this line exclusive of GST is not given, then also we will take the assumption as exclusive of GST. Suppose if it is given as inclusive of GST, then we will take as inclusive of GST. Then, number 5, Mrs. Kajal has hired out 1,400 chairs and 100 coolers to Function Garden, Ajmer, Rajasthan for 3,30,000 exclusive of GST, including cost of transporting the chairs and coolers from Mrs. Kajal's godown at Jaipur to the Function Garden, Ajmer. Service of renting of chairs and coolers taxable at 12% and transportation service is taxable at 5%. Now, in this case, what we need to do? First, all are taxable. What are the two elements here? Renting of chairs and coolers and transportation. Both are taxable. Is it naturally bundled in the ordinary course of business? Yes, in the ordinary course of business, the one who is giving the renting of chairs, etc., will only do the transportation. Usually, when a function is happening, we order for some shamyana and chairs, etc. What they will do? They will bring that, they will put shamyana and chairs, and once the function is over, they will pack and they will take, because they need to protect their assets. So, due to that reason, so in the ordinary course of business, the one who is giving the chairs and all on rental basis, they will only do the transportation. Therefore, it will be coming under, come on, naturally bundle. And what is the principal supply here? Renting of chairs and coolers. Therefore, it will be composite supply. In case of composite supply, which rate we need to take? Rate of principal supply, that is 12%, and apply it on the entire amount. What is the entire amount? 3,30,000. 3,30,000 into 12%. How much? 39,600. Clear here? Then next, illustration 6. A house is given on rent through a single rent deed, one floor of which is used as residence, exempted. So renting of residential property for residential purpose is exempted. So that is exempted. And other for printing press at a lump sum rent amount. So we have one taxable and one exempted. Renting of residential property for commercial purpose is taxable. Renting of residential property for residential purpose is exempted. So now one taxable, one exempted we have here. Now tell me what is your answer. So is it composite supply? No. In order to become composite supply, all the supplies should be taxable. When we have one taxable and one exempted, will it become composite supply? No. So therefore, it will become mixed supply. Yes. Why mixed supply? Because there is a single rent, single price. Therefore, it will become mixed supply and entire rent will become taxable. Is it clear? Highest rate is what? Taxable. So entirely it will become taxable. Are you understanding here? So therefore, highest rate supply is renting for commercial purpose. Therefore, it is mixed supply and entire rent taxable at the rate applicable to renting for commercial purpose. Then illustration 7. Sagar Limited supplying a kit which contains a tie 12%, a watch 28%, a wallet 28% and a pen 12% as a combo for 4,500 rupees. Now, tie, watch, wallet and pen are bundled as a kit. The kit is supplied for a single price. Determine the nature of supply and GST payable. So, whether all are taxable? Yes. Naturally bundled? No. So, therefore, it is not a composite supply. Now, is it single price? Yes. Therefore, it will become mixed supply, and highest rate is what? 28%. That is applied on entire amount. That is 4,500. 4,500 into 28%, 1,260. So, this is how we need to, but mainly I am pretty much sure you will get confused only in place of naturally bundled and not naturally bundled. That's the only place where you will find it difficult. So, therefore, worst come scenario pa, you take a assumption and you write. Okay, worst come, that is you are unable to decide whether it is composite or mixed. 99% of the cases it will be given in the question itself. Clearly they will give. So, this product cannot be supplied without the other, or some clue will be given in the question. If you are unable to find that, then you take an assumption. It is assumed that these are naturally bundled in the ordinary course of business. Therefore, it is treated as composite supply. Like that you write. Okay. Then we have section 8 also we completed. We have some important circulars relating to supply. First one is movement of conveyances between distinct persons. Any transaction between distinct persons is supply under 71C, correct? Any transaction between distinct person is supply under 71C. Here what happened? MRF Limited, from their factory in Tamil Nadu to their factory in Gujarat, they are taking in lorry some goods and spare parts. Okay. Now, GST is payable on the lorry or not? GST is not payable on the lorry, because that lorry will go unload the goods and will return. So, on that lorry we don't have to pay any GST. Then on the goods inside the lorry, whether we need to pay GST? Yes. So, on lorry no GST, but on the goods inside the lorry GST payable. But on the spare parts, whether these spare parts are for further sale in the Gujarat factory or for consumption in the Gujarat factory, consumption in the Gujarat factory, on that also no GST. So, tell me, what are the cases when there is no GST? General rule is any transaction between distinct person, it is paid as supply under 71C and chargeable to GST. But two exceptions. Exception number 1, in case of conveyance. In case of conveyance sent between the distinct person, no GST payable on conveyance. Second exception, spare parts. Spare parts sent between the distinct person, not for further supply, but for consumption. Then also GST not payable. Is it clear? So, that is this point. Movement of train, bus, truck, tanker, trailer, vessel, container, aircraft, etc. carrying goods or passengers or both, okay, or for repairs or maintenance shall not constitute supply and not chargeable to GST. Same way, the circular is extended to interstate movement of rigs, tools and spares and all goods on wheels, and except in case where the movement is for further supply of the same. So, whatever I discussed here in this example, the theory only given here. So, what are the 2 points you need to remember? Movement of conveyance between the distinct person, not a supply. And movement of spare parts, tools, etc. between distinct person, not for further supply but for consumption in the distinct person, will be treated as supply or not treated as supply? Not treated as supply. Clear? Same way, from MRF Limited factory in Gujarat to MRF Limited workshop in Maharashtra, they are taking a lorry for repairs. Whether GST payable on the lorry which is taken for repairs? No. On conveyance, no GST pa. On conveyance which is carrying goods or which is sent for repairs, whatever purpose it may be, on conveyance there is no GST. Now, MRF Limited workshop in Maharashtra is providing repair services to that factory in Tamil Nadu, okay, repairs to the lorry. Now, whether that repair service will become supply? Yes. Sir, lorry no GST, but they are providing some repair services na. On that repair service, it will become supply under GST and chargeable to GST. So, however applicable GST as the case may be shall be leviable on repairs and maintenance done for such conveyance. What is the first point? Any movement of conveyance between the distinct person, no need to pay GST. Let it be carrying goods or people or for repairs. However, on repairs done by the other distinct person, repair services, GST payable. And on tools, spare parts, etc., which are sent from one distinct person to another distinct person, no need to pay GST if it is not for further supply. If it is for further supply, then it will be treated as goods only, na? Then GST will be payable. Then second circular, that is activity of printing. Printing activity is supply of goods or supply of services. For example, you are having one book with you, okay? That book has got both goods element and service element. What is a goods element in that book? Paper and ink, correct? What is the service element? Printing and binding, okay? Now, what constitutes principal supply in that? Paper and ink, printing and binding, which is predominant element? Okay, paper and ink, if it is main, then last batch books we have. So last batch books you can buy if you want. May 2020, May 21, you buy, no? Or same attempt book, but printing is not proper. Some image, like images and all gone and not properly printed. Buy, no? No. Even if one small page is torn also, you will return the book and ask for a new book, correct? Which means paper and ink, buy, no. It's not for the paper and ink you are purchasing, it is for the printing quality. That is, if the information is not properly printed, why will you buy, pa? Or page numbers are scrambled and it is given, so will you buy? No. So printing and binding is the predominant supply, so it will be treated as supply of goods or service, service. Sorry. Then you go to one photo studio and they take one passport size photograph of yours and they will give one photo, 4 or 8 photos they will give, you pay for that. What is the goods element? That paper and ink there also. And what is the service element? Taking photo and printing it, okay. Now what constitutes principal supply there? Printing. Why they are printing? Suppose your photo only, but not properly taken photo, printed, just because it is printed you will pay? No. You will ask him, what kind of idiot, who is that person? You ask that person only to pay money. So correct or not? So we will not pay, only if it is proper we will pay, which means again there it is not for the paper and ink, it is for what? Printing. So when printing constitutes predominant element, it will be treated as supply of service. So in printing job, there will be 2 elements, goods element is paper and printing is the service element. It should be classified based on principal supply. If printing constitutes principal supply, it will be treated as supply of service. If paper constitutes principal supply, for example, this is one tissue paper, tissue paper. In this tissue paper, one hotel name will be printed or restaurant name will be printed. Just because restaurant name is printed, carefully we will keep? No. For whatever purpose we use, that purpose only we use. Correct or not? What, yeah? So therefore, what constitutes the predominant element in this? Paper. So therefore, if paper constitutes the principal supply, it will be treated as supply of goods. Understood? Then, next one, tenancy premium. So, to understand tenancy premium, there is one connecting concept, that is taxability of rent, that we need to know. Then we will come back to tenancy premium. Now there is an amendment. So first I will tell you what was the provision. First says renting of immovable property. No need to write, just listen. Renting of immovable property. Immovable property is divided into 2. Immovable property is divided into 2. That is residential property and commercial property. How do we know whether it is a residential property or commercial property? At the time of construction itself, we get an approval. So in that approval, we will give as to whether we want to construct a residential property or commercial property. Based on that, we will know whether it is a residential property or commercial property. Okay. For example, at the time of construction of this building, so they would have taken approval for what? Residential or commercial. Okay. So residential property, commercial property. Residential property again divided into two. Residential property for residential purpose. Residential property for residential purpose. Residential property for commercial purpose. What is example of residential property for commercial purpose? A person taking a residential property on rent and using it as his office. Chartered accountants, advocates, doctors and all will take a house and convert that house into their business, place of work, correct or not? So residential property used for commercial purpose. Residential property for residential purpose means stay, normal. Commercial property for residential purpose, commercial property for residential purpose or for commercial purpose. Commercial property for residential purpose, commercial property for commercial purpose. What is commercial property for residential purpose means? Hotel. Hotel is a commercial property. But you take the hotel for what purpose? Stay. So that is residential purpose. Then commercial property, commercial purpose, normal. So there is one shop which you are taking on rent for running your business. So that is commercial purpose. Now, residential property that is commercial property for residential purpose, previously we had one exemption. Per day, if the charges is less than or equals to 1000 rupees, it is exempted. 1000 rupees per day or equivalent is exempted. Now that exemption is withdrawn, which means even if you stay in a hotel with 300 rupees per day also you have to pay GST. Is it clear? So whatever may be, means hostel fees and all will be taxable. Yes, hostel fees and all will be taxable. Previously hostel fees was exempted under this reason that per day it is less than 1000 rupees. Usually 5000 or 10,000 will be paid as hostel fees. When you convert it into per day, it is less than 1000. Therefore, it was exempted. Now that exemption is withdrawn. Let it be for residential purpose or commercial purpose, fully it will be taxable. So renting of commercial property, let it be for residential purpose or let it be for commercial purpose, fully it will be taxable. And who will pay GST? Supplier will pay GST under FCM. Then renting of residential property for commercial purpose, that is also taxable. That was also taxable. Now also it will be taxable under FCM. Renting of residential property for residential purpose, previously it was fully exempted. But now there is a change in this. Again divide it into two. Renting of residential property for residential purpose to unregistered person or to registered person. To unregistered person or to registered person to whom we are giving on rent. If we are giving on rent to an unregistered person, then it will be exempted. If we are giving on rent to a registered person, it will be taxable under RCM. New amendment. This is an amendment. So renting of residential property for residential purpose to a registered person is now taxable under RCM. Remember RRR. Okay. Enough. Renting of residential property for residential purpose. Renting of residential property for what purpose? Residential purpose. To whom? Registered person. Okay. It is covered under taxable RCM. 4R. RRR. Okay. So it is taxable under RCM. Clear here? And suppose if it is a residential property for residential purpose to unregistered person, then only it will be exempted. So it is like, say for example, usually corporates and all will take residential property on rent and use it as a guest house for their employees. And now that becomes taxable. Why that becomes taxable? Corporate is registered person and it's a residential property. Even though it is used for residential purpose, now they have to pay GST under RCM. Okay. So this chart already I have given here. Renting of residential property, commercial property. Commercial property is now always taxable under FCM. And residential property for commercial purpose also taxable under FCM. Residential property for residential purpose to registered person will be taxable under RCM, unregistered person will be exempted. Can you remember this pa? Whatever is given here, so this portion previously it was fully exempted, but now here again we have a division. Previously this portion was fully exempted, now there is a breakup there. To unregistered person only exempted, to registered person it will be taxable under RCM. Now we will see what is tenancy premium, etc. First, tenancy premium will arise in two situations. Whenever we transfer the tenancy right to another person, we get some extra money. That extra money is known as tenancy premium. For example, have a look into this situation. There is a property owner who enters into a lock-in agreement with tenant A for 3 years. What is the meaning of lock-in agreement means? Property owner cannot ask tenant A to vacate, and tenant A also cannot give notice of vacation for a period of 3 years. Means for 3 years, who is having the control over the property? Tenant A, for which tenant A will pay security deposit and rent. So whether security deposit is consideration or not treated as consideration, not treated as consideration because it is refundable in nature, not treated as consideration. What about rent? Rent is treated as consideration and taxable based on above chart, depends what type of property, the rent will be taxable or exempted. Generally rent will be taxable now, correct? Only one place it is exempted. What is that? Renting of residential property for residential purpose to an unregistered person is only exempted. Otherwise always it will be taxable. Then, now who is having control over the property? Tenant A. Now tenant A don't want to stay in that property. So then what he can do? He can transfer the tenancy right to another tenant. So tenant A transfer the tenancy right to tenant B, for which tenant B paid 80,000. Why tenant B will pay this 80,000? No, he will give his security deposit. Security deposit of tenant A he will get. Then why tenant A is getting an extra amount of 80,000? Because tenant A would have incurred some expenditure for that property or would have made it conducive for the business. So for example, you took one place and converted it into a restaurant. To make it as a restaurant, you do lot of interior work, correct? Like properly toilets and all you will construct, and then ACs, interior, kitchen, like that everything you will make. Now, if you are giving that particular property on rent to another restaurant, that another restaurant don't have to come and do these expenses, correct or not? So there is a conducive environment which you are creating. That's why usually you will collect extra amount, or the location advantage or any reason you got an extra amount. This 80,000 rupees will always be taxable in the hands of tenant A irrespective of the property. So what is the point you need to remember? Come on. Tenancy premium received by tenant A or tenancy premium received by a tenant will always be taxable irrespective of the nature of property. Understood? Whereas this tenant A may share some tenancy premium with the property owner. That tenancy premium received by the property owner, say some 32,000 is received by the property owner, that 32,000 will be taxable in the hands of property owner or not, depends upon the rent. If rent of the property is taxable, the tenancy premium received by property owner also taxable. If the rent of the property is exempted, tenancy premium received by the property owner is also exempted. Okay. But for tenant, should we check this? No. For tenant, tenancy premium will always be taxable. But for property owner, depends upon the rent. If rent of the property is taxable, tenancy premium taxable. If the rent of the property is exempted, tenancy premium also exempted. Understood? So, tenancy premium arises in a situation where there is a lock-in rental agreement. Transfer of tenancy rate or renouncement of tenancy rate against tenancy premium is always taxable in the hands of tenant. However, taxability of tenancy premium received by property owner depends upon the taxability of rent. Suppose if this 32,000 is taxable in the hands of property owner, they will pay GST and in turn recover it from tenant A. Correct? If property owner has to pay GST on 32,000, they will pay GST and in turn recover it from tenant A. Now tenant A will take it as ITC. Now tenant A will pay GST on what? 80,000. So while paying GST on 80,000, whatever GST already paid on 32,000, they will adjust. So there is no double taxation. Clear? So don't think, sir, 80,000 tenant A is also paying. Again, 32,000 property owner is also paying. Then this 32,000 is getting taxed 2 times. No, because property owner will pay tax, recover it from tenant A. Tenant A will take it as ITC and adjust against the GST payable on 80,000. Then next one, taxability of interest earned by a del creditor agent. First we will see taxability of interest income. Interest income is broadly divided into 2 in GST. Interest on loans, advances and deposits, and interest on account of delay in receipt of consideration. So interest is divided into 2 parts. Interest on loans, advances, deposits. Example, housing loan, education loan, or any personal loan, any kind of loan, or any kind of deposit. You make a fixed deposit or savings deposit or a term deposit, you get interest na. That interest on loans and interest on deposits is exempted. Clear? Whereas interest on account of delay in receipt of consideration. What is the meaning of interest on account of delay in receipt of consideration? You have to give me some money. You did not pay on time. So therefore, I am collecting some interest from you. This is known as interest on account of delay in receipt of consideration. Interest on loans, advances, deposits is exempted. Whereas interest on account of delay in receipt of consideration is included in the value and chargeable to GST accordingly. Okay. So tell me, what is the taxability of interest income? Come on. Interest on loans, advances, deposits is exempted. Interest on account of delay in receipt of consideration will be taxable, including the value and taxable accordingly. Now, del creditor agent will receive some interest from the buyer. Now concentrate. You are my buyers. I am a del creditor agent. I have one principal. Okay. Now, principal will send the goods to me and I will sell the goods to you, and even though I am not receiving money from you, I will pay to my principal first. So then I will be called as a del creditor agent. But what a normal agent will do? Normal agent will receive the money from the buyer and deduct his commission and then send the money to the principal. That's why we would have learned that del creditor agent will have the risk of bad debts. Why del creditor agent will have the risk of bad debts? Because del creditor agent first he is making payment to the principal and later on he is collecting it from the buyers. So which means if the buyer is not paying to del creditor agent, then the del creditor agent has to bear that burden. So that's why the risk of bad debts is on del creditor agent. Are you listening? Now in this case, del creditor agent is giving a credit facility to the buyer. Will you agree with me? How credit facility given to the buyer? First del creditor agent is making the payment and thereafter del creditor agent is getting money from the buyer, means some credit period is given. For that credit period, del creditor agent will collect some interest. Understood the situation? Sir, del creditor agent received the goods from the principal and del creditor agent sold the goods to the buyer, and del creditor agent first he made the payment to the principal and later on he collected money from the buyer along with interest. Now, for this interest, what is your argument? So, del creditor agent is telling, sir, this interest is on loan, advances, etc. Therefore, it is exempted. But department is telling, no, this interest is on account of delay in receipt of consideration. So, on that interest, GST is payable, for which CBIC gave a circular. Simple. Suppose if del creditor agent is raising invoice in his name, then who is the supplier to you? Agent or principal? Who is the supplier? I am raising invoice in my name. Agent is raising invoice in agent's name. Now who is the supplier to you? Agent or principal? Agent. Now whatever money you are giving to the agent, supplier, there is a delay. That's why interest is collected. So it will come under interest on account of delay in receipt of consideration and chargeable to GST. If invoice raised by del creditor agent to the buyer, then interest received by del creditor agent include in the value and chargeable to GST accordingly. Clear? Suppose if I am not raising the invoice to you, but my principal has raised the invoice to you, then who is the supplier to you? Principal. Then whenever you pay interest to me, I am a third party to the transaction, correct? Means I am like a financier. I am like a financier. So this interest collected from you will be for giving loan. Therefore, this interest is exempted. Okay. So if invoice is raised by principal to the buyer, then interest received by del creditor agent from the buyer is exempted. Again, I am repeating, please listen. That is, del creditor agent receiving the interest from the buyer. Whether invoice is raised by the del creditor agent, yes, means del creditor agent is receiving that interest on account of delay in receipt of consideration. Therefore, it should be included in the value. Whether invoice is raised by del creditor agent, no, principal is raising. Then whatever interest collected by the del creditor agent is only for giving finance facility. So therefore, that interest will be exempted. Okay. So you need to remember this. So can you tell me taxability of interest? Come on. In case of del creditor agent, invoice raised by del creditor agent to the buyer, then interest is taxable. Super pa. Invoice is not raised by del creditor agent, interest is exempted. Then look into the next circular. Taxability of bus body building determined on the basis of principal supply involved in the transaction. What is this bus body building? First, you will purchase a bus with only the chassis, tires and the engine, and you will take it to the bus body building shop. In that bus body building shop, they do the fabrication. This fabrication they do, and they will fix it on this. So we get the bus. So this fabrication of the structure is done by the bus body building. And in this fabricated structure, what are all the goods element? Steel sheets, pipes, etc. is the goods element. And what is the service element? Fabrication, bringing it into existence like this is the service element. So what is the principal supply according to you? Goods or service? Material illa fabrication? Which is the principal element? Fabrication. Because only material we cannot do this, correct? It is not like pasting, correct? So we have to do lot of work in this. So fabrication will be taken as the principal supply. Therefore, it will be treated as supply of service. Then taxability of rethreading of tires. Rethreading of tires means, so they will take the old tire, to that old tire they will fix the grip. That is known as rethreading of tires. Now if the old tire belongs to you, I am just doing the rethreading, means it is supply of service. If I buy the old tire from you and I sell the rethreaded tire to you, then it will be supply of goods. Simple. Supply of rethreaded tire, where old tire belongs to the supplier. Old tire belongs to the supplier means what? I have purchased the old tire and I am giving you, that it is supply of goods. If the old tire belongs to recipient, it is yours only, I am just doing the rethreading, means it will be supply of service. Then taxability of priority sector lending certificates. So what is this priority sector lending certificates? I gave with an illustration, you can see that below. First of all, priority sector loans we need to see. What are priority sector loans? What is considered as priority sector loan? Housing loan, MSME loan, agriculture and farmers loan, education loan, these are all considered as priority sector loan. Now, what is the difference between a bank and a normal NBFC? Bank and a NBFC, what is the difference? NBFC will not accept public deposits, will use the money what they have for giving the loans. But what a bank will do? Bank will accept the public deposits and will be giving it as loans to the people. So, as bank is accepting the public deposits, every bank is having a restriction of giving loan to the priority sector. A percentage of their public deposit they need to give loan to the priority sector. So there is one new bank, Lena Dena Bank, and RBI gave a license to that Lena Dena Bank with the condition that 30% of the public deposit they should give loan to the priority sector, that is housing loan, education loan, MSME, etc. And for the financial year 2020-21, they have accepted a deposit of 100 crores and loan to the priority sector is 20 crores. So actually how much they should have given as loan to priority sector? 30%. 30% of 100 crores is how much? 30 crores. But how much they gave loan to the priority sector? Only 20 crores. So what is the shortfall? 10 crores. What if this 10 crores of loan, if they are not giving, their license will be cancelled. This Lena Dena Bank's license will be cancelled. Now, on the other side, HDFC Bank is also having the license from RBI with the same condition. For the financial year 2021, they made a deposits of 1000 crores. They accepted a public deposit of 1000 crores. Out of this, how much they need to give loan to priority sector? 30%. 30% means 300. But they gave a loan to priority sector 380 crores. How much they have exceeded? 80 crores. Now, Lena Dena Bank is purchasing 10 crore worth of priority sector lending certificate from HDFC Bank. What is the advantage of this to Lena Dena Bank? Already how much loan they have given to priority sector? 20. Now when they buy this priority sector lending certificate from HDFC, their revised loan to the priority sector is 30 crores. So they are achieving it. So their license will not be cancelled. Okay. Now, what is the advantage of this to HDFC? Already HDFC gave the loan, excess 80 crores. Now, by selling the priority sector lending certificate, they get 10 crores in liquid cash. So, using that, they can again make a further loan. So, what is the revised loan to priority sector by HDFC? 370 crores. Now, this transaction of sale of PSLC will happen through e-Kuber portal of RBI. And this will not be treated as securities because these are not traded in stock exchange. Then it will be treated as supply of goods and deemed interstate supply chargeable to GST under RCM. This you don't have to remember, but this you need to remember. This will be treated as goods. So now tell me, trading in PSLC is treated as supply of goods or supply of service? Supply of goods. See, these are just like some certificates which are sold pa. So I have some scripts or certificates or licenses, etc. Trade license we will transfer na. Just like that it will be sold and we get the money and that will be chargeable to GST. Then last one, taxability of hire purchase transaction. Hire purchase transaction versus hire purchase financing. In hire purchase transaction, how many parties are involved? Two parties are involved. Who are they? Hire vendor and hire purchaser. Now, hire vendor will collect the money from hire purchaser in installments. In every installment, there will be interest component, yes or no. And that interest will be taxable or exempted. That interest will be taxable because it is on account of delay in receipt of consideration. Whereas in hire purchase financing, there will be three parties. Who are those three parties? Hire vendor, hire purchaser, and one financier. Example, Bajaj Finance, IDFC Finance, etc. Now, you are buying a product from me. Now, you will pay money to me or to the financier? To the financier. Installments you will pay to the financier. Now, that financier is collecting in installment both interest and principal. That interest collected by the financier is exempted. Why it is exempted? Because it is on account of interest on loans, advances, deposits. So, see this. First, there is a machinery having a cash price of 40,000 rupees and this is payable in installments of 4,000 rupees each for 12 months. Then what is the hire purchase price? 4,000 into 12, 48,000 is the hire purchase price. What is the interest involved in hire purchase? 8,000. Suppose if it is a hire purchase transaction, there are two parties, hire vendor and hire purchaser. Now, GST is payable on 40,000 at the time of delivery of machinery. That is cash price we will pay today itself, GST. Whereas on this interest, when we will pay GST? Only on receipt basis. Sir, GST is accrual basis or receipt basis? GST is generally accrual basis. Accrual means what pa? Invoice or payment, whichever is earlier. But only in one place we need to pay GST on receipt basis. What is that one place where we need to pay GST on receipt basis? Interest. Interest on loans, advances, deposits, we need to pay GST on receipt basis. Then this 8,000 rupees will be taxable. When it will be taxable? As and when we are receiving the money, at the time it will be taxable. Then hire purchase financing. In that, 3 parties are there. And GST payable on 40,000 at the time of delivery of machinery. Financier recovers installments. In every installment, principal component will be there, interest component will be there. Principal is not a supply and interest is exempted. Why interest is exempted? Because it will come under interest or discount on loans, advances, deposits. Both cases there are installments. Now, non-payment of installment, a penal interest will be charged. What is the taxability of that penal interest? If the main interest is taxable, penal interest also taxable. If the main interest is exempted, penal interest is exempted. In hire purchase financing, interest is taxable or exempted? In hire purchase financing, interest is taxable or exempted? Exempted. As interest in hire purchase financing is exempted, penal interest is also exempted. In hire purchase transaction, whether interest is taxable or exempted? Taxable. So, penal interest is also taxable. This you need to remember. If interest involved in EMI is taxable, then penal interest is also taxable. If interest involved in EMI is exempted, then penal interest is also exempted. Understood, pa? So, that is with respect to this. Then, taxability of artwork sent to artists to galleries for exhibition. Listen, simple one only. That is, I am sending a artwork to the art gallery. Today, is it treated as sale in my hands? No. Then when it will be treated as sale in my hands? Only when the art gallery is selling the artwork to a buyer, on that date, it will be treated as sale in my hands. Because I will not get money from the art gallery now. I will get the money from the art gallery only when the artwork is actually sold by the art gallery to the buyer. So therefore, it is only when the buyer selects a particular artwork displayed at the gallery, the actual supply takes place and applicable GST would be payable at the time of supply. For example, today I am sending the artwork to art gallery. Today is 29th March. I am sending the artwork to art gallery. And art gallery is selling it on July month. Now when I will receive money? March month or July month? July month. So therefore I need to treat it as supply in which month? March month or July month? July month only. Then taxability of perquisites provided by employer to employee. Already we discussed this. This is an amendment, and perquisites provided by employer to employee in terms of contractual agreement. So will not be treated as supply. It will be excluded from supply. So supply of employer to employee, perquisites excluded from supply, gifts not covered under salary. If it does not exceed 50,000 in a financial year, not treated as supply, here you change it to greater than. If it exceeds 50,000 in a financial year, entire amount treated as supply under 7(1)(c). Then, one more circular part, taxability of sale of land after leveling, laying down drainage lines, etc. That is, generally, you would have seen lot of plots ads. Chennai mega real. So like one big plots, what they will do, first real estate developers, they will be buying the land and they will do leveling. They will divide it into plots like 1200 square feet or 1800 square feet, like that plots they will make, and they will put the drainage lines, electric lines, etc. and they will be selling the developed plots. Sale of land as such or after development, both is sale of land only, na? Sale of land as such or sale of land after development into plots, both are same. Sale of land only. So sale of land is excluded from supply. As sale of land is excluded from supply, even sale of land after development of this land also excluded from supply. However, to develop this land, I will be receiving some services from contractors, na? Leveling, bulldozers, and then laying down the lines, etc. I will receive some service. That service will become supply. However, any service provided for development of land like leveling, laying of drainage lines, etc. shall attract GST at applicable rate. So, these two are the updated circulars, amendments. Apart from that, we don't have anything. And even this is also an amendment. That is this renting is there, na? Renting. So, this is also amendment here. So 2 circulars and this renting. These are the amendments for May 23 exam. Okay. So now we will move on to practice manual discussion related to this. Segment 2 we have completed. Supply, composite supply and mixed supply. So say this. We need break up. 4 o'clock we will take break. 10 minutes. 10 minutes. We will complete this and take break. MCQs alone. Goods as per section 2 clause 52 of CGST Act includes what? Actionable claims is included? Yes. Growing crops attached to land agreed to be severed before supply? Yes. Money and security is included or not included? Not included. So only 1 and 2. So option C. An exempt supply includes supply of goods or service or both which attracts nil rate of tax, non-taxable supply, supply of goods or service or both which are wholly exempt. All these 3 are covered under exempted supply, na? Notified as exempted, nil rated and non-taxable. So all these 3 will be treated as exempted supply. Which of the following services received in the course or furtherance of business without consideration in the course or furtherance of business amount to supply? Import of service by a person in India from his son well settled in USA. Is it supply under 71C? First, import of service without consideration from a related person. Son is always related in the course or furtherance of business. Therefore, it will be supply under section 71C. Next, import of service by a person in India from his brother well settled in Germany. Is it import of service from a related person? No, because brother well settled in Germany means not dependent on that person. So not dependent brother is not treated as related, so therefore it is not a supply. Then import of service by a person in India from his brother wholly dependent on such person in India in France. Is it supply under 71C? Yes. Supply under 71C. Import of service from a related person without consideration in the course or furtherance of business. Then import of service by a person in India from his daughter. Daughter dependent or not, because son, daughter and spouse, whether or not dependent, always treated as supply under 71C. So therefore, which are the activities treated as supply under 71C? 1, 3 and 4. So option A. Which of the following activities shall be treated neither as supply of goods nor as supply of service? Means what? It is excluded from supply or not a supply. Permanent transfer of business asset where ITC has been availed on such asset. Is it supply or not a supply? Supply. Supply under 71C. Temporary transfer of intellectual property right. That is also supply under 71A. A. Transportation of deceased. Transportation of deceased. Deceased means dead body. Deceased means dead body. So transportation of dead body is what? Excluded from supply. So not a supply. Not a supply. Service by employee to employer in the course of employment. Not a supply. So question is what? Which of the following activities are neither supply of goods nor supply of service? 3 and 4. So option D is the answer. Which of the following activities supply of service? Transfer of right in goods without transfer of title in goods. Service. Not title, only right. So service. Transfer of title in goods. Transfer of title in goods is what? Supply of goods. Transfer of title in goods and an agreement which stipulates that property shall pass at a future date upon payment of full consideration. That is also supply of goods, because the title can be transferred at present or at a future date. It will be treated as supply of goods. So only first one will be supply of service. Then number 6. P Limited has its registered office under Companies Act 2013 in the state of Maharashtra, from where it ordinarily carries on in business of taxable goods. It also has a warehouse in the state of Telangana for storing the said goods. What is the place of business of P Limited? See, generally place of business means any place from where the business is ordinarily carried out. So it includes our warehouse or administrative office, everything. So they have registered office in the state of Maharashtra. So that is also their place of business. And it also has a warehouse for storing the goods in Telangana. So that is also their place of business. So both Telangana and Maharashtra. Then which of the following statement is true under GST law? Grandparents are never considered as related person to their grandson or granddaughter. True or false? False. When they will be considered as related? If they are wholly and mainly dependent. Grandparents are always considered as related. That is also false. Grandparents are considered as related to their grandson or granddaughter only if they are wholly or mainly dependent on their grandson or granddaughter. That is true. Grandparents are considered as related to their grandson only if they are not dependent. No, only if they are dependent. So option C is the answer. Which of the following is not considered as goods? 10 paise coin having a sale value of 100. Goods are not goods because it is not treated as money, so that is goods. Shares of unlisted company is not goods. Why? Securities. Lottery tickets are treated as goods. Yes. So what is not considered as goods here? Only shares of unlisted company. That is option B. Then, assuming that all activities given below are undertaken for a consideration, state which of the following is not a supply of service. Renting of commercial office complex. Renting. Supply of goods or supply of service? Service. An employee agreeing to not work for the competitor organization after leaving the current employment. Consideration for not doing an act. Not doing an act, where it will come? Supply of service. Repairing a mobile phone. Service. Provision of services by an employee to employer in the course of employment. Not a supply. Correct? So the question is what? State which of the following is not a supply of service. Option D. So we'll take a break and thereafter we will see the descriptive questions. Okay. So we'll meet at 4:10 pa. See this question number 1 in descriptive questions. State whether the following supplies would be treated as supply of goods or supply of service as per Schedule 2 of CGST Act. Renting of immovable property. Renting. Supply of goods or supply of service? Supply of service. Then transfer of right in goods without transfer of title in goods. Transfer of right. Supply of service. Works contract service. Notified transactions will always be treated as supply of service. Then temporary transfer of permitting use or enjoyment of any intellectual property right. IPR. Temporary transfer of IPR. Where it will come? Supply of service. Sale of personal car to a dealer. Sale of personal car to a dealer is supply of goods. Then any treatment or process which is applied to another person's goods. So carrying out process on the goods belonging to the other person. What is it? Supply of service. Job work. Supply of service. Transfer of title in goods. Title. Supply of goods. So it is direct pa. That is, they will give a situation and just we need to write supply of goods or supply of service. What is the legal reference that we need to give? Legal reference in exam. Section 7, subsection 1, capital A, read with dash schedule. Second schedule. This is classification of supply into goods or services. So second schedule. Then question number 2. Explain the services provided by way of tolerating non-performance of a contract and its chargeability under the provisions of CGST Act. So whenever there is non-performance of a contract, means what? Breach of a contract. Upon non-performance of a contract or breach of contract, what will happen? As per contract, you need to do certain things. If you are not doing those obligations, then it will be called as non-performance of a contract. So, meaning the agreement entered into between the parties stipulated that both service provider and recipient should abide by the terms and conditions of the contract. Say, I enter into contract with you to sell some goods. I have to sell the goods, you have to buy the goods, and you need to pay for it. Terms and conditions we need to fulfill. In case any of the parties breach the contract, then it will be known as non-performance of a contract. Then such person who breached the contract is liable to pay the damages in the form of fines and penalties to the other person. Say, I entered into contract to sell 500 bags of rice. And if I am not delivering 500 bags of rice on so and so date, then I have to pay you 1 lakh rupees as damages. That will be specified in the contract. So, is consideration for tolerating an act, so is this damages coming under consideration to tolerate an act, and will it become supply? Yes. So, tolerating non-performance of a contract is supply under section 7. And also it will be treated as supply of goods or supply of service, supply of service. And there is one exemption in this case. Any consideration received by government by way of non-performance, tolerating non-performance of a contract is exempted. For example, listen, you entered into contract with the state government of Tamil Nadu to do audit of TASMAC. Okay, so very good audit actually it is. So, and daily at the time when you complete audit and go 2-3 bottles you can take with you. So, this audit of TASMAC you have entered into contract, and immediately you got a threatening call that you should not do the audit of this. And maybe some person who is a relative of MLA or MP etc. So, they don't want you to do the audit. So, now you say, first you entered into contract to conduct the audit, and thereafter you breach the contract by way of non-performance of the contract, for which you need to pay some 50,000 rupees as damages to the state government. Now, state government is collecting this 50,000 rupees damages now, that will be exempted. So, that is this conditional exemption. However, in case of supplies to government, non-performance of contract by the supplier of service, for which consideration in the form of fines or liquidated damages is payable, is exempt from GST. And related to this liquidated damages, one 4-page circular is given in ICI. So, actually one circular is given by CBIC that they have given. That we will be discussing in exemptions chapter. So, we have, but that much we don't have to learn. A small chart I have given. So, that is a very important amendment for your exam. So, that small chart principle, if you learn any example, we will be able to arrive at the answer for that. Okay. Then, and one important announcement to all of you. Tomorrow, our class is tomorrow, and day after tomorrow, our class is at 9 o'clock. 9:30, no? Today it started. So, tomorrow it will be 9 o'clock. Please ensure that you are coming here by 9. Okay. And Saturday, that is day 4. On that day, our class will be from 7 to 3 because they have some event here. So, they are not allowing. So, due to that reason, on Saturday, that is today, it is up to 6:30. Tomorrow and day after tomorrow, it will be, so morning 9 o'clock to evening 6:30 like that. And on Saturday, that is 4th day alone, it will be morning 7 o'clock to 3 o'clock. And day 4, I will be conducting one MCQ test, live MCQ test on all the portion together. Some 50 MCQs will be there, all the portion, and those who get the first mark on that will get a very good exciting prizes. If 100 students get also, all 100 students we will give prize. Okay. And so therefore, please attend all days lecture, and that last day it will be like a MCQ test, so that we will know whether whatever we have learnt, we get the confidence or not. Okay. Then, and one more thing is that, see, you will definitely have lots and lots of personal issues and business avocations, etc. and all, because you guys are busy on earth, but it's okay. So this 4 days of classes, you will be able to complete one subject, means nothing wrong in attending. Okay, so therefore you may think like, okay, we can watch in YouTube, etc. and all. Don't depend on this recorded classes. This recorded classes is something which makes us lazy, according to me. Even though I am selling recorded classes, all these things, I myself I am telling this because I hate this YouTube recorded classes, etc. Because there is no other go, okay, fine. But when there is a chance, I also like face to face only, and because here one dedication we will have, okay, morning to evening we will sit, we will learn something and we will go, so the portion gets completed. But when you sit at home and watch the YouTube video, so it will go, keep on, and you will get some notification in your mobile and you will get deviated, and again you will not get that interest to come and watch it. So that will be creating lot of disturbances due to that reason only. So therefore try to attend. Just today anyhow you came, today it's evening, and tomorrow, day after tomorrow, and one more day, so that try to attend the session as much as you can, so you will learn here itself. Okay, and on 1st onwards we are recording these lectures, and on 1st onwards we are uploading this lecture. Okay, so therefore definitely you will be completing by that time, and then only some other persons will be able to see that. So for me, your priority first. Okay, then say this. Question number 3. Shahab says an air conditioner dealer in Janakpuri, Delhi needs 4 air conditioners for his newly constructed house in Safdarjung enclave. Therefore, he transfers 4 air conditioners from its stock. This point only I discussed. An AC dealer purchased the ACs and transferred 4 ACs from his stock to his house. Examine whether the said activity amounts to supply under section 7. Is it for consideration or without consideration? It is without consideration. Without consideration means we need to refer 7.1c. In that 7.1c, what is the first point? Disposal of business asset on which ITC is available. So that will become supply under 7.1c. Then further, a Janakpuri resident, Akash, approached Shahab Sales. He sold an air conditioner to Shahab Sales for 5,000 rupees. Whether this will become supply under 7.1a? First, Akash is selling the AC. He get the consideration. So activity for consideration. But is it in the course or furtherance of his business? No. He is a resident. He is one individual. And this Akash has brought the said air conditioner 6 months before for his residence. So this is just like the example which I told you. Mobile, you have a mobile, you sell it in OLX. Whether it will become supply? No, because it is not in the course or furtherance of business. Does the sale of air conditioner by Akash to Shahab Sales amount to supply? No, it is not a supply. Now here what you need to write is, first case you need to write about section 7.1c, read with schedule 1, permanent transfer or disposal of business asset, and second one you need to write, even though there is consideration, but the said activity is not in the course or furtherance of business, therefore it is not a supply. Okay. Then, and some more answer sheets what I have seen, I have observed is about the presentation. So like including handwriting also. So please little bit maintain pa. So handwriting and all is very, very important. So you leave 1 line gap and write, it's okay. Like answer sheet, 1 line gap you give and write. So then answer booklet will not be sufficient for what you are writing. So that booklet you cannot fill pa. So that much and all you are not writing. Okay. So you will not fill that booklet. And even if you, because for income tax separate booklet is there, GST separate booklet is there. You will not fill that first. Even if you fill additional and all, they will give pa. You don't worry, and you don't have to save the pages and all. So properly, legibly, 1 line gap you give and you write. Okay. Reason being, when it is crammed and all, because see, lot of valuers are sadists nowadays. So they will not be having patience to see that and give marks and all. Stupid idiots are there. And I have seen many students know correction it is done, but marks not given. And therefore, it is like to avoid all these cases only. So what I am telling is that you have completed one answer, leave that page. Don't write in that page itself answer to question number 6C like that. Don't write. So you leave that page blank. If it is there, you strike off. You write it in the next page so that no, indirectly you are telling the valuer, idiot, this answer is over. For this answer, you give the marks. Okay. So what to do? Because we have to understand he will have some issue with his wife. That problem he will show on our answer sheet. Okay. So see this. Raman is an architect in Chennai. His brother is settled in London, is a well-known lawyer. Raman has taken legal advice from him free of cost with regard to his family dispute. Examine whether the said activity would amount to supply under section 7, read with schedule 1 of CGST Act. First of all, is it import of service from a related person? Brother settled in London, well-known lawyer, means brother is not dependent. Non-dependent brother is not family, consequently it is not import of service from a related person. Let it be family dispute or let it be for business unit. First of all, it is not import of service from a related person, consequently it is not supply. Why won't it come under 7.1b? Because there is no consideration. If it is consideration only 7.1b, here there is no consideration, so therefore it is not a supply. So first we need to write about that 7.1c, related parties means who, family definition, and then we need to write that, brother of Mr. Raman is well-known lawyer and not dependent on Raman. Therefore, it is not import of service from a related person, consequently not a supply like that. Then next, question number 5. Meghraj and Company wishes to commence the business of supplying ready-made garments within Punjab and in neighboring states of Delhi and Haryana. Kindly state as to what is the taxable event under GST and leviability of CGST, SGST or UTGST and IGST. Where is he doing business? Punjab, and they are making sales to Delhi and Haryana. So therefore, in case of goods, what will be taken as the place of supply? Ending point of the goods. What is the ending point of the goods? Delhi and Haryana. Location of supplier? Punjab. Place of supply? Delhi and Haryana. Therefore, it is what type of supply? Interstate supply. Interstate supply means chargeable to IGST. That is what we need to write. So therefore, IGST will be levied on interstate supplies. Then question number 6. Damodar Private Limited, registered in Delhi, has transferred some goods to its branch registered in West Bengal so that the goods can be sold from the branch. The goods have been transferred without any consideration. So they have a registered office in Delhi and they are sending to their branch in West Bengal. So registered. So this will be treated as transaction between distinct persons. Okay. The goods have been transferred without any consideration. The company believes that the transaction undertaken by it does not qualify as supply as no consideration is involved. Even if there is no consideration, transaction between distinct persons is treated as supply under 7.1c. Ascertain whether the transfer of goods from branch office, head office to branch office qualifies as supply? Yes. And question number 7, composite supply is treated as supply of that particular goods or service which attracts highest rate. True or false? False. Composite supply is treated as supply of that particular goods or service which is principal supply. Actually, only highest rate in case of mixed supply. Then transfer of title under or possession is necessary for a transaction to constitute supply of goods. No, and it is under both transfer of title and transfer of possession. Both should be there, then only it will be called as supply of goods. Mere transfer of possession without transfer of title is not supply of goods. It will be supply of service. and transfer of possession, where an agreement to transfer the title at a future date is also supply of goods. So therefore both should be present. Title as well as possession, both have to be transferred for a transaction to be considered as supply of goods. Then what if possession is transferred today but title may be transferred at a future date? Even then it will be treated as supply of goods. But we agreed to transfer the title. We agreed to transfer the title. Today we may not transfer the title, but we agreed to transfer the title at a future date upon receipt of last installment. So we agreed not today. So it is still supply of goods. Then Sulekha manufacturers have a factory in Delhi and a depot in Mumbai. Both these establishments are registered in respective states. So Delhi and Mumbai. Okay. So it will be transaction between distinct persons. See, actually distinct persons is defined under section 25. Section 25, distinct persons are defined. So that's why in answers when you see, they are giving the reference of section 25, 25 subsection 4, etc. So you remember this whenever you are writing. So branch, factory in Delhi and depot in Mumbai are treated as distinct persons as per section 25. Also as per section 7 subsection 1 clause C read with schedule 1 of CGST Act, any activity involving goods or services between the distinct person constitutes supply. Like that we need to write. Then finished goods are sent from factory in Delhi to Mumbai depot without consideration. Yes, it will be supply. Then examine whether the activity of import of service, already we discussed this. Srinidhi Kaushik, so this question already we discussed. Then question number 11, determine whether the following supplies amount to composite supply. A hotel provides 4 days, 3 nights package wherein the facility of breakfast and dinner is provided along with room accommodation. Now, facility of breakfast and dinner is provided along with room accommodation means it will be what type of supply? Naturally bundled or not naturally bundled? Naturally bundled, sir, because whether you eat food there or not, you have to pay for the food, correct? Per day room charges you pay for complimentary breakfast. Whether you eat complimentary breakfast or not, you have to pay for it. Because many times when I go to restaurants like hotels outside Chennai, I stay there, and definitely morning class means I will be leaving early, and breakfast and all they will be giving at 7:30 to 9 o'clock like that. I will daily miss complimentary breakfast. And can I ask, sir, I missed the complimentary breakfast, 100 rupees deduction? No, not possible. They will not give. If you eat, you eat. If you don't eat also, you have to pay for it. Which means this complimentary breakfast is naturally bundled along with the room. So therefore, it will be coming under composite supply. Then a toothpaste company has offered this scheme of free soap along with toothpaste. Soap, toothpaste, no way connected here. So therefore, it is not naturally bundled. So it is not a composite supply. Toothbrush and toothpaste may be a composite supply, because some brands, they will give toothbrush along with the toothpaste. Okay. So like if you buy the toothpaste, you will get toothbrush by default free. So then if that be the case, then it will become composite supply. Otherwise, it is not. So here soap and toothpaste is not a composite supply. Then see this question. Dum Dum Electronics has sold the following electronic items to Akbar retail store: refrigerator, stabilizer, LED, split AC and stabilizer for split AC. More than one supply in a transaction, correct? All are taxable? All are taxable. Is it naturally bundled? No. How refrigerator and LED television and AC will be naturally bundled? So they are not naturally bundled. So therefore it is not naturally bundled. And they have issued a single invoice indicating price of each of the above items separately in the same. Akbar retail store has given a single check of 1 lakh for all the items as a composite discounted price. State the type of supply and tax rate applicable. Is it composite supply? No. Why it is not composite supply? Reason what you will write? these are not naturally bundled in the ordinary course of business. Therefore, it is not a composite supply. First point. Next, is it mixed supply? Why? Yes, sir. Mixed supply. Yes, sir. Mixed supply. No. Mixed supply. No. Why mixed supply? No. Because they have given the price of each of the above items separately. So, single invoice. Invoice need not be required here. Invoice is not required. What we need to see is the price. Single price or separate price. Is it single price? No. So, therefore, second point you will write, it is also not a mixed supply as there is no single price. Third point, therefore, it will be treated as individual supplies as separate price is available. So, therefore, respective price will be taxable at the respective rates. So, state the type of supply and tax rate applicable. Supply of these goods is therefore supply of individual items which are taxable at respective rates applicable to them. Then question number 14. Manikaran, a registered supplier of Delhi, has supplied 20,000 packages of 30 each to Mukija gift shop in Punjab. Each package consists of 2 chocolates, 2 fruit juice bottles and a packet of toy balloons. Determining the rate, and GST rate is given: chocolate 18, fruit juice 12%, toy balloons 5%. All are taxable. Naturally bundled in the ordinary course of business? No. These are not naturally bundled. Is it for a single price or separate price? Single price. So, first we need to write, as these are not naturally bundled in the ordinary course of business, it is not a composite supply, and as there is a single price, it will be treated as mixed supply, and the highest rate in the given supplies, that is 18%, needs to be applied on the entire transaction. Therefore, GST payable will be 20,000 into 30 rupees into highest rate 18%. That is, so how much? GST payable on 6 lakhs. 6 lakhs at 18%. So, you can compute and show also. That is what? 1 lakh 8,000. 1 lakh 8,000. See, I have given answers for each and every question, detailed answers. Now, what you need to know is that it's not about how many questions you are solving. It's about how are you writing the answer. Because the major problem many students will face, even you can ask those students who already wrote exam, or some of you if you have written exam, by seeing the question you will be able to know identify the answer. It will strike in your mind what is the answer, but the pen will not move in the answer sheet. You don't know what to write. That is the problem in indirect taxes, because you read the question, somewhere in your intuition it will throw the answer. This could be the answer, like that. None of the student has complained me telling that, sir, I am not able to find the answer. This is not the complaint. I don't know what to write in the answer sheet. I know the answer, but I don't know what to write in the answer sheet. That's why what you need to do is that I am giving you a simple strategy to follow. You take the question, you take a paper and you write the answer. You know the answer. All these questions we are discussing, you know the answer. You please write the answer randomly, any question. Not necessarily every question you need to do that way. Randomly, for example, some 15 minutes you are sitting. So, you have 15 minutes time. Take 1 or 2 questions and you write how you will write in the main exam. Now, you see the answer that is given in the book, compare your answer with the answer. You yourself will know as to what extent you have written, what you could not write. So, what are the extra points you could write. So, that is the best introspection you can do. Rather than depending on anyone to evaluate, etc., you yourself check as to you write the answer without seeing the answer. Okay, without seeing the answer, you write the answer and then cross check. Computation and all, you are a pro, superbly you will write. But writing the notes for the computation only, you are making a mistake. Computational, amazingly you are arriving at the answer, but you will not get the full marks for that. You have to write the justification. For writing the justification only you will get marks. Hope you understood what I am telling. So, please do this exercise. Not necessarily that daily you need to do, randomly, like 2 days once, 3 days once, you have time till exam. So, just some questions you take and see, you will learn your mistakes. Okay. Then see this question number 15. Gagan Engineering Private Limited, registered in Haryana, is engaged in providing maintenance and repair services for heavy steel machinery. For carrying out the repair work, Gagan Engineering Private Limited sends its container trucks equipped with items like repair equipments, consumables, tools, parts, etc. from Haryana workshop to its own repairing centers located in another states across the country, where clients' machinery are being brought and are being repaired. So see this, it's a new question. So not yet asked in exam. Gagan Engineering Private Limited, where are they registered? Haryana. Is engaged in providing maintenance and repair services. What they are doing is that they are sending a container truck. In that truck, all the repair equipments, consumables, tools, parts, etc. is there. They are sending this repair truck from where? From Haryana workshop to their repairing centers in other states. And there they will ask the client to bring the machinery for repairing the machinery. So machinery are being brought and are being repaired. Discuss the leviability of GST on interstate movement of trucks from the workshop of Gagan Engineering in Haryana to its own repairing centers in other states. Now they are sending the truck from Haryana to their repairing centers in other states. Is that supply between distinct persons? Even though their workshop in Haryana and repairing center in other state is distinct persons as per section 25, but we have one circular. As per that CBIC circular, any movement of conveyance between the distinct person is not a supply. However, GST is payable by the repairing center when they are doing the repairs to the clients. Is it clear or not? But on the truck, whether GST payable? No. On truck, GST not payable. So as per CBIC circular, interstate movement of various modes of conveyance including trucks, etc. So between distinct persons will not be neither supply of goods nor supply of service, and therefore it will not be leviable to IGST. However, GST is payable on the repair and maintenance done on such conveyance. So in the present case, whether the trucks which are sent from workshop to repair centers in other state is supply? No, it is not a supply. The next one, PTL Private Limited is a retail store of merchandise located in 25 states or union territories in the country. For the purpose of clearance of stock of merchandise and to attract consumers, PTL Private Limited launched a scheme of buy one get one free for the same type of merchandise. For instance, one shirt to be given free with purchase of one shirt. Determine how the taxability of the goods supplied under buy one get one free scheme to be determined. Buy one get one or buy this product get any other product, etc. These are all treated as composite supply, mixed supply. Example, Kinder Joy is there. Kinder Joy, you know, na? In that Kinder Joy, chocolate and one toy they will be giving us one pack. Is it composite supply or mixed supply? Composite supply. Why? For every product you purchase, you will get one toy inside that, which means it will be all are taxable, naturally bundled in the ordinary course of business, and the principal supply is what? Chocolate. Therefore, it will be treated as composite supply. Means the free gift given along with the chocolate is also taxable along with the chocolate. Correct or not? So it will be treated as a single supply and principal supply. So entirely it will be taxable. Got it? Suppose if you buy soap powder, 5 kg rinse soap powder, one bucket free. Okay. Now in this case, is it composite supply? Here also one product is given free. Is it composite supply? No, because not for all quantity of rinse soap powder they are giving this bucket. You understood? So therefore, for 1 kg rinse soap powder are they giving this bucket? No, means in the ordinary course of business it is not naturally bundled. Then how we will treat it? As mixed supply. Why? There is only single price. Because bucket is given free there is no price for it. So which means there is a single price. So it will be treated as mixed supply. and between soap powder and bucket, which is having highest rate, that rate will be taken on the entire transaction. So this buy one get one free or buy one get a product free, how we need to treat? We need to treat it as, come on, composite supply or mixed supply. So goods or services which are supplied free of cost are not treated as supply except when it is covered under schedule 1. Under buy one get one free scheme, it may appear that they are like one item is given free without the other, etc. However, it is not individual supply of free goods, but a case of 2 or more individual supplies where a single price is being charged. It can best be treated as supply of goods for a price of 1, and taxability of such supply will depend upon whether it is composite supply or mixed supply, and the rate of tax shall be determined accordingly. Means on that free product, whether we pay GST? No. But the free product is going to influence the rate of GST. How? Soap powder 12%, bucket 18%, highest rate is, now 18% is applied on the soap powder. Why? The free product is going to influence the rate of GST. Is it clear? Even though that bucket is not chargeable to GST separately, but the free product is going to influence the rate of GST because it will be treated as mixed supply. Clear? Then next, question number 17. Sarvana and Sons wishes to start supplying alcoholic liquor in the state of Tamil Nadu. Therefore, it applies for license to Tamil Nadu government for selling liquor, for which the state government has charged specified fee from it. What is this known as? Liquor license granted by state government. That is what? Covered under supplier, excluded from supplier? Excluded from supplier. As per 7 subsection 2, read with schedule 3. It is excluded from supply. And that is what we need to write. Neither supply of goods nor supply of service. Then examine whether the following activities would amount to supply under GST. So this is how the questions will be given. Like 2 situations they will give for 4 marks. So 2 marks each. Okay. Glory Limited is engaged in manufacturing and selling cosmetic products. Seva Trust, a charitable organization, approached Glory Limited to provide financial assistance for its charitable activities. Glory Limited donated a sum of 2 lakhs to Seva Trust with a condition, that Seva Trust will place a hoarding at the entrance of the trust premises displaying picture of the product sold by Glory Limited. What type of donation? Conditional donation. Because there is an obligation on the part of the person who receives the donation to display the products of that person. So which means it will be treated as conditional donation, and that is consideration, and it will become supply under 7(1)(a). That's what we need to write. Okay. Next, second, Mr. Swami of Chennai is working as a manager with ABC Bank. He consulted Messrs. Jacobson's Company of London and took its advice for buying a residential house in Mumbai and paid them a consultancy fee of 200 UK pounds for this import of service. Now, is it supply? 7(1)(b) or 7(1)(c)? 7(1)(b), import of service for a consideration, whether or not in the course or furtherance of business. Even though it is not in the course or furtherance of business, it is supply under 7(1)(b). That is the explanation we need to write. Okay. So these are the questions that we have in the practice manual related to this, and there are many areas actually which are not tested. Like, see this priority sector lending certificate, we did not have any past questions. Then rethreading of tires, bus body building, Del Creator agent, these are all some areas which they have not yet tested the questions on that. So definitely on this also can be asked. Now, segment 3 is liability to pay GST. So this liability to pay GST is given in section 9. So we have completed section 7 and section 8. Section 7 supply and section 8 composite supply, mixed supply. We are moving on to section 9, liability to pay GST. So as per section 9, subsection 1 and subsection 2, liability to pay GST to government is on dash, supplier or recipient supplier. So generally it is FCM, but in 3 cases liability to pay GST to government is not on supplier but on some other person. In case of 9 subsection 3, there are some notified goods and services. For those notified goods and services, liability to pay GST is on recipient. In case of 9 subsection 4, there is a person who is making purchases from a unregistered person. On those purchases from an unregistered person, GST is payable under 9 subsection 4 by the recipient. So again in 9 subsection 4, who will pay GST? Recipient will pay. And 9 subsection 5, there are 4 notified services supplied through e-commerce operator, that is HATE. Remember, HATE. H for housekeeping service, A for accommodation service, T for transportation of passengers by any motor vehicle, and E for eating food from the restaurant. So we will again discuss that. So for these 4 services, liability to pay GST is not on supplier but on e-commerce operator. Okay, pa? So 9192 general rule, who will pay? Who will pay GST to whom? Supplier shall pay GST to government. 93, who will pay GST to government? Recipient. 94, who will pay GST to government? Recipient. Recipient. 95, who will pay GST to government? E-commerce operator. And in case of 93, when recipient will pay GST to government? Notified goods and services. Then 94, when applicable? Inward supply of a promoter or builder from an unregistered person. There is a promoter or builder. What promoter or builder will do? Will do the construction. So they will be making purchases from an unregistered person. On purchase of promoter or builder from an unregistered person, they need to pay GST under RCM. And when 9 subsection 5 will be applicable? So in case of notified services through e-commerce operator. Okay. Again I am repeating, please answer. When 93, who will pay GST to government? Recipient. 94, who will pay GST to government? Recipient. Recipient. 95, who will pay GST to government? E-commerce operator. Okay. Then when 93 will be applicable? Notified goods and services. When 94 will be applicable? Purchases of promoter or builder from, once more, purchases of promoter or builder from unregistered person. And when 95 will be applicable? Notified services through e-commerce operator. Okay, clear? Next. So we are discussing 9 subsection 5 first. So this 9 subsection 5 first we are discussing, because 9.3 tomorrow we can start fresh, but this 9.4 and 9.5 we will complete first. Okay, so therefore 9.5 you see first. 9 subsection 5. 9 subsection 5. So page number 49. Page number 49. So when 9 subsection 5 will be applicable? There are 4 services which are provided through an e-commerce operator. Liability to pay GST is on e-commerce operator, not on supplier, neither on supplier nor on recipient, but on e-commerce operator. What are those 4 notified services? You need to remember with a keyword H. H for housekeeping services. Example, Urban Clap, Quicker, etc. In that Urban Clap or Urban Company, who is the supplier? Say for example, you have a AC in your house and one AC servicing needs to be done. So now you will open the Urban Clap app and you will book for a AC service. Now one technician will come to your home and will do the AC servicing, will collect some 399 rupees or 499 rupees from you. So now in this case, who is the supplier? That AC technician is the supplier. And who is the e-commerce operator? Urban Company is the e-commerce operator. Who is the recipient? You are the recipient. Now you pay that 399 or 499 na. On that, who will pay GST to government? That AC mechanic or the e-commerce operator Urban Clap? Urban Club or Urban Company will pay the GST to government, but not the AC mechanic. Now, what AC mechanic will get? He will get his share. Full 399, 499 will go to Urban Club. No, AC mechanic will get his share. On that share, whether AC mechanic is required to pay GST? No, AC mechanic is not required to pay GST, because why? Already on this tax is paid, pa. Why again we need to pay the tax? No need to pay tax. Now, what will be included in the aggregate turnover of AC mechanic? You paid 399 rupees to Urban Club. Urban Club say maybe retaining 99 rupees or 199 rupees, and 200 rupees they will pay to the AC mechanic. Now 200 rupees is included in the aggregate turnover of AC mechanic, or 399 will be included in the turnover of AC mechanic? 399, not 200. Entire 399 will be included in the aggregate turnover of AC mechanic. So that is because of a circular. That circular was given for the last attempt itself. So what will be included in the aggregate turnover of the supplier? The money that they collect from the e-commerce operator, or the total transaction amount. It is the total transaction amount that will be included in their aggregate turnover. Please concentrate. Now, that AC mechanic has to register. When he will register? As and when his aggregate turnover exceeds threshold limit, he will register. The moment he registers, this is not going to be a notified service, and liability to pay GST is on AC mechanic only, because this H is becoming a notified service only when the supplier is not registered. If the supplier is registered, is that service a notified service? No. Then liability to pay GST is on AC mechanic. So, in this AC mechanic example, up to the date AC mechanic is registered. So, on direct supplies, you can make direct supplies also. Direct supplies means what? First, Urban Club, you book one person. He will come and you will take his contact number and you will say, gee, next time onwards when I need, I will directly call you. You come and do for 300 rupees. For you, you want to save 99 rupees. For him, he want to earn extra 100 rupees, because if he do through Urban Club, he will get only 200. So therefore, what will happen? So this will be direct supply, not through Urban Club. Okay. In that case, who will pay GST? No GST. Why no GST? He is not yet registered, pa. Only when a person is registered, they will pay GST. Okay. Through Urban Club, who will pay GST? Urban Club. E-commerce operator, Urban Club will pay. So up to the date that AC mechanic is registered, if it is direct supplies, who will pay GST? No GST. The moment when they register, so then they will pay GST. Correct or not? But up to the date they register, if they supply through e-commerce operator, who will pay GST? E-commerce operator will pay. Okay. After they register, with respect to direct supplies, they will pay. AC mechanic will pay. With respect to supply through e-commerce operator, who will pay? AC mechanic only will pay. E-commerce operator will not pay, because it is not a notified service. Are you understanding? So now, what you need to remember first, housekeeping services through e-commerce operator is notified if supplier is unregistered. If supplier is unregistered. Once more, what are the notified services? HATE, H, housekeeping services. If supplier is unregistered, supplier should be unregistered. Then A for accommodation services. Accommodation services, example, Go Ibibo, Make My Trip, Oyo Room, etc. and all. Who is the supplier? Hotel. Hotel is the supplier. And who is the e-commerce operator? Oyo. Who is the recipient? Your friend. Okay. So recipient. Now, in this case, who will be paying GST on the room charges? Who will pay GST? Hotel, Oyo. And therefore, liability to pay GST is on e-commerce operator. Here also same condition, pa. If supplier is unregistered. If supplier is registered, then who will pay GST? Supplier only will pay. This is not a notified service. Okay. Then HAT. T for what? Transportation of passengers through any motor vehicle. Previously it was radio, cab, taxi or motor cab, motor vehicle, etc. like that it was there. But now any motor vehicle, transportation of passengers by any motor vehicle. So what and all will be coming there? Ola, Uber, Rapido, Redbus, every kind of transportation of passengers through motor vehicle is included. Now, in this case, say for example, you book a cab through Ola. Who is the supplier? Driver. And e-commerce operator? Ola. Who is the recipient? Passenger. So passenger will pay some money. On that money, who will pay GST to government? E-commerce operator, Ola will pay. What if supplier is registered? Even then, it is a notified service. So for this transportation point, supplier may or may not be registered. It will always be treated as notified service. Then last, E for eating food from the restaurant. In case of eating food from the restaurant, so example Swiggy, Zomato, etc. Who is the supplier? Restaurant. Who is the e-commerce operator? Swiggy, Zomato. And who is the recipient? A customer who places the order. On customer, whatever he pays, who will pay GST to government? Swiggy or Zomato. Now here also, let the supplier be registered or not. Always liability to pay GST is on e-commerce operator. Now concentrate. There is one hotel, Hotel Buhari, like that one hotel is there. You go to that hotel and you eat food there and they will collect GST from you and they will only pay GST to government. This is a direct supply. Now, you can also order the food from that hotel through e-commerce operator. Now you pay money. On that, who will pay GST? That Hotel Buhari or the Swiggy? Swiggy will pay. Means, even if the supplier is registered, the liability to pay GST is on e-commerce operator only. So, in this HATE, for first two, supplier should be unregistered. For the next two, supplier may or may not be registered. Understood here? Now, suppose if e-commerce operator is liable to pay GST, we need to check whether they have physical presence in the taxable territory. If they have physical presence in the taxable territory, they will register and pay. What if they don't have physical presence in the taxable territory? What is taxable territory for GST? India. India is the taxable territory. What if they don't have physical presence in India? Then, so we need to check whether they have a representative. So if they have a representative in India, that representative shall be liable to pay GST. For example, you take Uber. Uber is not having physical presence in India. Ola is having physical presence in India. So they will register and pay. Uber is not having physical presence in India, but they have a representative office in India. So that representative office will register and pay GST. What if they don't have a representative office also? Then they should appoint a representative for the purpose of payment of GST. See this. Such e-commerce operator shall appoint a person in the taxable territory for the purpose of paying tax, and such person shall be liable to register and pay tax. Is it clear? Next. So, important points in this regard. Only in case of notified services under 9.5. What are those notified services under 9.5? HATE. E-commerce operator is liable to pay GST. In other cases, can you tell me the other cases, other supply of services through e-commerce operator? Example. Amazon, Flipkart. Is it notified 9.5? No. Then who will pay GST? Supplier. Then Book My Show. Who is the supplier? Cinema theater. Book My Show is e-commerce operator and you are booking the ticket, recipient. Who will pay GST to government? Book My Show or cinema theater? Cinema theater. Is it clear? So therefore, in case of other than these notified services, any other supply through e-commerce operator, liability to pay GST is on supplier. And every e-commerce operator who is liable to pay GST is compulsorily required to get registered. Means every e-commerce operator should be registered compulsorily, irrespective of their threshold limit. Also, every supplier of goods through e-commerce operator is compulsorily required to get registered irrespective of aggregate turnover. For example, if you want to sell anything through Amazon or Flipkart, even though your aggregate turnover does not exceed threshold limit, compulsorily you need to register, then only you can sell through Amazon or Flipkart. Is it clear? So every supplier of goods through e-commerce operator is compulsorily required to get registered. What about supplier of services through e-commerce operator? They need to register only when their aggregate turnover exceeds threshold limit. So there is no compulsory registration for supply of services through e-commerce operator. Is it clear? Let it be notified services or other than notified services. Supplier of notified service and supplier of other than notified service through e-commerce operator is required to get registered only when aggregate turnover exceeds threshold limit for registration. So these points I have just given in a chart form. In the next page you can see. Supplies through e-commerce operator is broadly divided into three parts. Supply of goods through e-commerce operator, supply of notified services through e-commerce operator, and supply of other than notified service through e-commerce operator. In case of supply of goods through e-commerce operator, who will pay GST to government on the supply? Supplier. In case of supply of notified services through e-commerce operator, who will pay GST to government on the supply? E-commerce operator. Then in case of supply of other than notified service through e-commerce operator, who will pay GST on supply? Supplier. So in the first and third case, supplier. In the second case, e-commerce operator. Now listen, concentrate. In the first and last case, e-commerce operator will pay GST on what? Supplier will pay GST on the transaction. Then e-commerce operator will get a commission. On that commission, e-commerce operator shall pay GST. Is it clear? Why that is not there for second point? Because for the second point, on total amount, GST is payable by e-commerce operator. So, in the first and third case, liability to pay GST on e-commerce operator with respect to commission and other charges. Even here also the same. And supplier will be liable to pay GST with respect to supply. Whereas in the second case, e-commerce operator only will pay GST with respect to supply, so that includes his commission, everything. Then, which supplier is compulsorily required to get registered? Which supplier? First supplier. Supplier of goods through e-commerce operator is compulsorily required to get registered. What about the second supplier and third supplier? They need to register only when aggregate turnover exceeds threshold limit for registration. Now, on this e-commerce operator transactions, they can make a question like this. You can see this. ABC Hotel. Concentrate, a very important question. Messrs. ABC Hotel started business on 15/5/2020, and ABC Hotel is providing direct services to the guest as well as through e-commerce operator. If they provide the service through e-commerce operator, how much e-commerce operator will get a share? 25%. How much ABC Hotel will get? 75%. And the applicable threshold limit of ABC Hotel is 20 lakhs. Okay. Now, here, this hotel services through e-commerce operator, is it notified for 9/5? Is it notified for 9/5? Yes, it is notified for 9/5. So, liability to pay GST is on e-commerce operator. With respect to direct services, supplier, only when they register, but otherwise there is no GST liability, correct or not? So, up to the date when aggregate turnover does not exceed 20 lakhs, up to the date when aggregate turnover does not exceed 20 lakhs, on direct supplies, is there a GST? No GST. And on supply through e-commerce operator, yes, who will pay GST? E-commerce operator will pay. Once they are liable to get registered, on direct supplies, who will pay? Supplier. On supply through e-commerce operator, who will pay? Supplier only. Why? Because it is what service? Accommodation service. Accommodation service H&A. So, in case of accommodation service, supplier should be unregistered. Here the supplier is getting registered. So, which means it is no more a notified service. So liability to pay GST is on supplier. You understood this part. Up to the date when they are liable to get registered, with respect to direct supplies, no GST. Supply through e-commerce operator, GST payable by e-commerce operator. As and when they are liable to get registered, so then with respect to direct supplies as well as supply through e-commerce operator, who will pay GST? Supplier only will pay GST. Now, when e-commerce operator is liable to pay GST under 9(5), they should issue invoice to the guest. So, on this 5 lakhs and 9 lakhs, who will raise invoice? E-commerce operator, because GST is payable by e-commerce operator, na? So, e-commerce operator shall issue invoice for 14 lakhs plus GST to guest. Up to the date when ABC hotel is liable to get registered, they shall raise bill or statement to e-commerce operator to get their share. Out of this 5 plus 9, what is the share of hotel? 75%. Please calculate and tell me. 5 plus 9 into 75%. 5 plus 9, 14. 14 into 75%. How much? 10.5 lakhs. So 10.5 lakhs will be raised by ABC hotel and they will collect. Will they add any GST on that? No, they are not yet registered, darlings. They are not yet registered. Why they will be raising GST? They are not yet registered. Okay. How much should be included in their turnover? 10.5 lakhs, 14 lakhs. How much should be included? 14 lakhs. I told you, not the share that they get, it should be included in their turnover. The total amount, the transaction amount. What is the transaction amount? 14 lakhs should be included in their turnover as their share. However, in their aggregate turnover, 14 lakhs shall be included. Got the clarity? Then, as and when ABC hotels are liable to be registered, now who will raise invoice? ABC hotel on entire turnover, direct supplies as well as through e-commerce operator. So 10 plus 5 plus 5 plus 8, 28 lakhs. So plus GST will be raised by ABC hotels. Now, whenever they are liable to get registered, now they will give share to the e-commerce operator, correct? Yes or no? How much share they will give to e-commerce operator? 25% of what? 28 lakhs, 28 lakhs or 13 lakhs? 13 lakhs. Sir, with respect to direct supplies, why they need to give share to e-commerce operator? Only with respect to these two, they will give share. What is that? 8 plus 5, 13 lakhs. 13 lakhs into 25% is what? 3.25 lakhs plus GST. On that, who should pay GST? E-commerce operator. So, whenever supplier is paying GST on the supply, e-commerce operator has to pay GST on the commission. Correct or not? So, now what is the e-commerce operator commission? 25%. On the 25%, e-commerce operator shall pay GST. Understood here? So, this is the concept of supplies through e-commerce operator. So, this illustration is very, very important. This can be tested. Okay. Now, one last time, can you tell me what are the notified services through e-commerce operator? HATE. H for? A for? T for? Transportation of goods or passengers, sir? Passengers. Then E for? Eating food from the restaurant. Okay. Then, so this 4 cases, first 2 cases supplier should be, next 2 cases supplier may or may not be registered. So we completed 9.5. Now we are moving on to 9.4. 9.4. So look into page number 46. 9.4 is purchases of a registered person from a unregistered person. Listen, there is a promoter or builder. Concentrate, please concentrate. There is a promoter or builder. That promoter or builder is making purchases from a unregistered person. So, on that, the promoter or builder is required to pay GST under RCM. Why will promoter or builder purchase from an unregistered person? For example, there are two shops. Shop A, you buy a product with GST. Same product in shop B without GST. From where you will buy? Shop B, correct? Now, suppose you are able to take ITC. You are able to take ITC. Which shop you will buy? Either shop A or shop B. You are indifferent, correct or not? So why? Because if you buy from shop A also, you can take ITC. So your cost is price. And if you buy from shop B, you are not paying GST, then also your cost is same. So promoter or builder, if they are buying from an unregistered person, what could be the reason? Because they cannot take ITC on their inward supplies. Why promoter or builder cannot take ITC on inward supply? Because the rate of GST on flats today is 1.5% or 7.5% without ITC. So you don't have to remember the rate, but you need to remember a fact. What is that fact? Promoter or builder cannot take ITC on their inward supply. Now what logically promoter or builder will try to do? They will buy from a unregistered person to reduce their cost, correct? But because of this, what is the disadvantage to government? Loss of revenue to government. So that's why they are telling, if promoter or builder is making purchase from an unregistered person, then they will not pay GST to the supplier, correct? So that will not be revenue to the government. So they are asking recipient to pay GST under RCM. But you buy from a registered person, you would have paid GST to supplier. That supplier will pay GST to government. Means government gets the revenue. Now you are buying from an unregistered person, no GST. So you pay GST under RCM. We need GST revenue. You understood? You die also, we need money. You got it? So you pay GST under RCM. So promoter or builder is required to pay GST under RCM only when they are purchasing from a. What if they buy from a registered person? Already GST paid. So no need to pay any GST under RCM 9 subsection 4. Understood or not? Now, so these purchases of promoter or builder is broadly divided into two. Inputs and input services, capital goods. Now, first you look into capital goods. Capital goods, are they purchasing from a registered person or unregistered person? You need to check. If capital goods are purchased from a registered person, they don't have to pay GST under RCM. Why? Already they paid. And if they buy capital goods from an unregistered person, they need to pay GST under RCM at the applicable rates. Applicable rates means applicable rate to capital goods. Understood? Now, suppose if they are purchasing inputs and input services, on these inputs and input services, few inputs and input service you can buy from an unregistered person, because first of all there is no GST on that. What are the non-taxable supplies under GST? Alcoholic liquor for human consumption. Is it related to construction? No. Therefore, that is not given here. Okay. So that is not given. Now, don't tell only when they drink that they will be able to work, sir, like that and that is different. But is it related to construction? No, not related to construction. Okay. Then petroleum products, 5 petroleum products, what are they? Crude oil. Is crude oil related to construction? No. Petrol, diesel, yes. For generator. That machine has to run a concrete mixer. So therefore, petrol and diesel is connected. So it can be purchased from an unregistered person also, no issue. That's why it is excluded. Okay. Then next. What is the next non-taxable supply? ATF, aviation turbine fuel. ATF is used by flights. So why in construction sector it will be there? Irrelevant. Then natural gas. Is natural gas connected to construction? Yes, for welding, gas welding. So therefore, these 3 non-taxable supplies, they can buy from an unregistered person, no issue. What are those 3? Petrol, diesel, natural gas. Then electricity anyhow exempted. So you can buy it from an unregistered person also, no issue. Then TDR, FSI and long-term lease. What is TDR full form? Transferable development right. What is FSI? Floor space index. And long-term lease. Okay. So let's try to understand this TDR, FSI and long-term lease, what is it and why it is to be excluded here? That is, generally FSI refers to floor space index. On a given plot of land, how much you can construct is known as FSI. On a given plot of land, how much building, number of floors you can construct is known as FSI. For example, you have a plot of land 8,000 square feet. On this 8,000 square feet, if the FSI is 2.2, if the FSI is 2.2, means how much we can construct on this 8,000 square feet. So built up area is plot area, how much? 8,000 square feet into 2.2, that will be. So 8,000 into 2, 16,000. So 16,000, that 8,000, 17,600 square feet. 17,600 square feet is the built up area. Means on a land of 8,000, we can construct 17,600 square feet. How, sir? All floors put together, all floors put together, we can construct this much only. That is known as FSI. Can I increase this FSI? Can I increase this FSI? Yes. Only way is to procure TDR. Okay. Can I increase the FSI? Yes. Generally not possible. But can I increase? Yes. Which way I can increase? I can acquire the TDR. From whom I need to acquire the TDR? To whom it is given. Okay, va? Let's see the other side. Say you have one house and Chennai Metro Corporation, Chennai Metro Rail Limited is putting a metro line. So they are demolishing your house. When they demolish your house, they are giving you a TDR for 1,500 square feet. Now, what is the advantage of this TDR to the government? Generally, what they need to give you? Compensation. But now they will not give compensation. They will be giving you TDR. What you can do with the TDR? I am a builder. So already I am constructing 17,600 square feet. Still I want to increase that. So when I want to increase that, I will procure the 1,500 square feet of TDR from you. You understood or not? Now you are the landowner. You are transferring me the TDR. On the TDR, I will definitely give you some consideration. Correct here. Freely you will give. You will charge some money. So that money what you have collected, on that I need to pay GST under RCM. So on transfer of TDR, there is a landowner who is transferring TDR to the builder. There is a landowner who is transferring the TDR to the builder. For transferring the TDR to the builder, builder will pay some consideration, and this consideration is covered under FCM or RCM? RCM. So who is having liability to pay GST to government? This builder is having liability to pay GST to government. Understood or not? So as it is already covered under RCM, under 9 subsection 3, due to that reason it is excluded here. Is it clear? So on this TDR, who is required to pay GST? Landowner or promoter or builder? Promoter or builder under RCM. Which section? 9 subsection 3. As it is already covered under 9 subsection 3, so therefore the promoter or builder is again not required to pay GST under 9(4). Same way FSI. Now I am constructing only 14,000 square feet. Still how much is there? So 3,600 square feet you can use. So that unutilized FSI I am transferring to you. When I am transferring that unutilized FSI to you, so on that also the promoter or builder will pay GST. Now landowner, instead of TDR, he will transfer FSI to the builder. For that, builder will pay some consideration. On that consideration, GST is payable by builder under RCM under section 9 subsection 3. So therefore, anyhow it is covered under RCM 9 subsection 3. That's why it is excluded. Same is the case long-term lease. Now, what are all to be excluded while computing these inputs and input services? Come on, 5, total 5. Electricity, petrol, diesel, natural gas, TDR, FSI and long-term lease. And these 5 we need to exclude. So remaining we need to see. Remaining you have to purchase from a registered person how much? 80%. If you buy less than 80% from a registered person, on that shortfall you need to pay GST under RCM. For example, this input services from that is total is 100 crores. 100 crores. In this 100 crores, you purchased from a registered person, say 75 crores. So, is it less than 80 or more than 80? Less than 80. Now, what is the shortfall? 5 crores. So, 5 crores you need to pay GST under RCM. Okay. At what rate? If it is cement, you need to pay GST under RCM at 28%. If it is other goods or services, you need to pay GST under RCM at 18%. Sir, what if the product is taxable at 5%? Even then 18%. If the product is taxable at 5% also, you need to pay GST under RCM at 18%. Why like that, sir? Then buy from a registered person. If you buy from a registered person, you would have paid 5% only now. You are buying from an unregistered person, so it is like a penalty. You need to pay GST under RCM 18%. Sir, what if the rate is more than 18%? Only one product is there, that is cement. Anyhow, we are paying 28%. You understood? So, when you are purchasing from unregistered person, only one product is more than 18, that is 28 cement, you have to pay 28%. If the product is less than 18% also, you need to pay 18% under RCM. Okay. Now, on 5 crores I paid. Now, still what is the remaining purchase from unregistered person? 20 crores. In this 20 crores, check whether cement is there. If cement is there, you need to pay GST under RCM at 28%. If it is other goods or services, GST not payable under RCM. Then means cement always should be purchased from a registered person. Then suppose if it is purchased or received from a registered person more than 80%, say 85 crores you purchased from a registered person. Then what is the balance purchased from unregistered person? 15 crores. You achieved 80%? Yes. Now in that 15 crores, check whether there is cement. If cement is there, you need to pay GST under RCM 28%. If it is other goods or services, GST not payable under RCM. Okay. This is the provision part. But I will try to simplify this further easily. So kindly make note of this. 3 steps. You have to remember just 3 steps. We can complete the answer. Summary of section 9 subsection 4. But till November 22 exam they did not ask, but this concept is there in your study material. So chance is there, they could coin one MCQ at least on this. So please be careful. Summary of section 9 subsection 4. First step, you need to check capital goods. First you need to check capital goods. Whether capital goods is purchased from a registered person or unregistered person, you need to see. Suppose if capital goods is purchased from registered person, whether you need to pay any GST under RCM? No GST. Suppose if you buy from an unregistered person, GST under RCM at what rates? At applicable rates. That is step number 1. Next, step number 2. You have written this. Capital goods, you are purchasing from a registered person, no need to pay any GST. If capital goods are purchased from unregistered person, you need to pay GST under RCM at applicable rates. Next, second, you need to see cement. Second, you need to see cement. Cement again divided into 2. Purchased from a registered person, purchased from a unregistered person. Purchased from a registered person, whether GST payable or not payable? Not payable, so no GST. Suppose if you are purchasing from an unregistered person, GST under RCM at what rate? 28%. Understood step 2 pa? Step 1, capital goods. Check whether capital goods is purchased from a registered person. Yes, leave it. Purchase from unregistered person, pay GST under RCM at applicable rate to the capital goods. Then second step, you take cement. Cement you check purchase from a registered person. Yes, then leave it, no GST. Purchase from an unregistered person, how much ever you purchase from unregistered person, on that you pay GST under RCM at 28%. Now third step, other inputs and input services from unregistered person. Other inputs and input services, other inputs and input services from unregistered person. Other inputs and input services from unregistered person divided by total inputs and input services. Total inputs and input services. Should we include cement also? Yes. Other inputs and input service from unregistered person divided by total inputs and input services including cement. And when you take this, you should not take 5. What are they? Electricity, petrol, diesel, natural gas, TDR, FSI and long-term lease, because for that this is not applicable, correct? So other inputs and input service from unregistered person divided by total inputs and input services into 100. Now you need to check this. So is the answer less than or equal to 20%? Means what? So more than 80% you purchased from registered person. So whether you need to pay any GST under RCM? No. Why? For cement we need to check. Already we checked. Cement already we did in step 2. So in step 3 what is there? Remaining is there. You understood here? So remaining purchases from unregistered person divided by total inputs and input service including cement into 100% less than or equals to 20%. No GST. You don't have to pay any GST. If it is greater than 20%, then what you need to do? Pay GST under RCM, pay GST under RCM at what rate? 18% on the difference above 20%. On the difference above 20%. Suppose if it is 25%, how much is extra? 5%. On that 5% you need to pay GST under RCM at 18%. So what are the 3 steps you need to remember? Step 1, capital goods. Capital goods purchased from registered person or unregistered person. Registered person, no need to pay GST under RCM. Suppose you purchase from unregistered person, pay GST under RCM at the rate applicable to capital goods. Second step, cement. Purchase from registered person, no need to pay GST under RCM. Purchase from unregistered person, pay GST under RCM at 28%. Then other goods and services from unregistered person divided by total inputs and input service including cement into 100. If it is less than or equals to 20%, means it is within the 20% limit, so no need to pay GST under RCM. If it is beyond 20%, you need to pay GST under RCM at 18% on the amount above 20%. Now, let's see some illustrations to understand this. Please write down illustration 1. Illustration 1. Illustration 1. Registered person, unregistered person. So cement 40 lakhs, unregistered person 10 lakhs. Then capital goods, registered person 20 lakhs, unregistered person nothing. Then building material, registered person 30 lakhs, unregistered person 20 lakhs. Then other materials, other services, registered person 20 lakhs, unregistered person nothing. Now tell me how much is the GST payable under RCM? 9 subsection 4. Come on, try. Just apply those 3 steps, you will get. Finished? Literal application of those 3 steps. If you do that, you will get the answer. $8 lakhs? 8 lakh 20. Okay. 6 lakh 40,000. Okay, let's check. So we need to compute GST under RCM under section 9.4. What is the first step? Capital goods. Capital goods, whatever is purchased from registered person, should we pay GST under RCM? No. Any capital goods purchased from unregistered person in the question? No. So therefore first step is 0. Okay. We don't have any capital goods purchased from unregistered person, so 0. Okay. Second step, cement. Cement, on purchases from registered person, should we pay GST? No. On purchase from unregistered person, how much? 10 lakhs. So 10 lakhs into 28%. 2 lakh 80,000. Then next, number 3. Other inputs and input services from unregistered person, how much? Other inputs and input services, so total how much? 20 lakhs. 20 lakhs from unregistered person, correct? From unregistered person divided by, what is the total inputs and input service? Don't take capital goods. Inputs and input service. What is inputs and input services? 40 plus 10, 50, plus 30, 80, plus 20, 100, 120. So 20 lakhs divided by 120 lakhs. You understood, Appa? Except capital goods, you take everything. 40 plus 10, 50, plus 30, 80, plus 20, 100, plus 20, 120 lakhs. So 20 divided by 120 into 100, how much? 16.67%, which is less than or equals to 20%. So no GST under RCM. Got it? So So then what is the total GST under RCM? Therefore, total GST under RCM under section 9(4) is 2,80,000. Easier. How you got 6,80,000 and all? Okay. So only this 2,80,000 capital goods we don't have. One more illustration. Yes. Okay. Now second illustration, you write down illustration 2. Illustration 2. Capital goods 5 lakhs from unregistered person and other services 20 lakhs, other services 20 lakhs from unregistered person. Come on, now do. Same, not same, slight change. Applicable rate for capital goods 12%. Applicable rate for capital goods 12%. Four lakh 20,000. Okay. 3,40,000. 48. 3,40,000. Okay. Let's check. First, capital goods pa. Capital goods, whether purchased from a registered person, yes, no GST payable. From unregistered person, we need to pay GST. So 5 lakhs into 12%, how much? So 5 lakhs into 12%, that is 60,000. Okay, then cement. Cement from unregistered person, same, 10 lakhs into 28%, 2,80,000. Now other inputs and input service from unregistered person, how much? So 20 plus 20, 40 lakhs. 40 lakhs divided by, what is the total? 40 plus 10 plus 30 plus 20 plus 20 plus 20, 140 lakhs. So 40 divided by 140 into 100. 40 lakhs divided by 140 lakhs into 100, 28.57, exactly 57, huh? 5714, okay, you have rounded off to 57, okay, no issue, 57%. Now, should we pay GST under RCM? Yes. So, GST under RCM on how much? 8.57. So, GST under RCM equals to, so this 28.57 is on what? 28.57 is on what? 140. Up 8.57 is also on what? Correct? So 140 lakhs into 8.57%, and this will be chargeable to GST at what rate? 18%. See how much? 140 lakhs into 8.57% into 18%. 2 lakh 15, 15,964. So therefore, total GST under RCM 9 subsection 4. Total GST under RCM under section 9(4) is 60,000 plus 2,80,000 plus 2,15,964. 5,15,000. Okay, 55,964. No one told me this answer here. So you got 4,40,000, 4,50,000 something and all. So simple here, see this. Third step alone I am repeating again, listen. First we need to take other inputs and input service from unregistered person, that is 20 plus 20, 40, divided by overall 140 except capital goods, that is 28.57. How much is allowed? 20% allowed. What is excess? 8.57. So 8.57% of 140 lakhs. On that 18% we need to pay GST under RCM. So 2,15,964. So this is the total GST under RCM 9 subsection 4. Now we will see one more question which I have given in the book itself. Look into illustration 2 in that book, page number 47. Page number 47. A promoter has procured the following goods and services for construction of a residential real estate project during a financial year. Name of the inputs and input services: sand, cement, steel, bricks, flooring tiles, paints, like that. Big list is there. And value of inward supply, whether received from a registered person or unregistered person, is given. And compute GST payable under 9.3 and 9.4. 9.3 and 9.4. In the following cases, if manpower supply service is received from a registered person. Suppose if this manpower supply is from a registered person. Now, this also we will do in the same steps. Okay. First, in this list, whether we have any capital goods. Please check in the question in your book. Check whether we have capital goods in the list. Yes or no? Yes. Whether it is purchased from registered or unregistered. Unregistered. So first we need to pay GST under RCM. So just write down capital goods. Okay, I will write it for you. So first capital goods. Step number 1, capital goods. That capital goods we have purchased from unregistered person. How much is the value of that capital goods? 40 lakhs. On that, what is the rate of GST? Applicable rate 12%. Therefore, 4,80,000 over step 1. Now, step 2, check cement. Check cement in the list. Cement, 15 lakhs. Purchased from registered or unregistered? Unregistered. So, therefore, on cement, we need to pay GST under RCM. How much? What is the value of cement? 15 lakhs. So 15 lakhs into what is the rate of GST? 28%. So 15 lakhs into 28%. 4,20,000. Now number 3. Other inputs and input service from unregistered person. Other inputs and input service from unregistered person. Check the list. What we have? Flooring tiles, 10 lakhs. Correct? Then anything else? That already considered capital goods. I am asking other inputs and input service. Electricity we should not take. Correct. FSI we should not take. So therefore, other inputs and input service from unregistered person 10 lakhs divided by total inputs and input services. Take your calculator. 10 plus 15 plus 20 plus 15 plus 10 plus 5 plus 10 plus 20 plus 15 plus 40. No, don't do plus 40. Why? Because it is capital goods. Again, don't do this plus 10 and plus 5. Why? Because this should not be considered. 120. So 10 lakhs divided by 120 lakhs. How much? 8.33, which is less than or equals to 20%. So should we pay any GST under RCM? No. So therefore, what is the total GST under RCM? Total GST under RCM under section 9 subsection 4 is 9 lakhs. Easy appa. Are you understanding this? Now, under 9.3, what is that we need to pay? On FSI, we need to pay GST under 9.3. Correct? So, 5 lakhs into 18%. How much? 90,000. 5 lakhs into 18%, 90,000. So, that we need to pay GST under RCM 9.3. That is on TDR FSI long term lease. Whereas under 9.4, it will be 9 lakhs. Because TDR FSI and long term lease is covered under RCM under section 9.3, where liability to pay GST is on recipient, that is this 5 lakhs into 18%. Now, next part, what if this manpower supply is from a unregistered person? Now, again we will do this. First step, will it change? No, same. 40 lakhs into 12%, 4 lakh 80. Second step, will it change? No, 15 lakhs into 28%, 4 lakh 20,000. Third step, now what is the inward supply from unregistered person? 10 plus 20, 30. So 30 lakhs divided by 120 lakhs. How much? 25%. So 25% means it exceeds 20% by what extent? So 25%. Therefore, how much is the GST payable under RCM? 120 lakhs into 5% into 18%. How much? 1 lakh 8,000. So, therefore, what is the total GST payable under RCM? 4 lakh 80, 4 lakh 20 and 1 lakh 8,000. That is 10 lakh 8,000. 10 lakh 8,000. And GST under RCM 9.3 is same, no change. So therefore here the answer is 10 lakh 8,000. You understood now how 1 lakh 8,000 we got? 5% we exceeded pa. On that 5% alone we need to pay GST under RCM at 18%. Okay. Then there are some more points related to 9.4. See this notes in page number 47. The above computation to be made together for inputs and input service and separate computation for capital goods, correct? That's why in step number 1 we did capital goods separately, because that 80% point is not applicable for capital goods. And the regular time of supply provisions not applicable, means when we need to pay GST. So we need to pay GST on a yearly basis, means monthly we don't have to do this computation. This computation should be done when? Yearly. Suppose if the project is completing in 8 months, project completion, okay, annual basis or up to project completion as the case may be. And this should be computed separately for each project. Means a particular builder may be doing 4 projects at a time. So each project they will do this calculation separately. GST payable yearly at the time of filing GSTR 9 or through DRC 3. At the time of filing annual return we need to pay this, or through DRC 3. DRC 3 is one document through which we can make the payment of taxes without 3B, without filing 3B. So 3B also we can pay tax. Suppose if you don't want to wait till 3B, now itself if you want to pay tax, you can pay through DRC 3. And these are the points with respect to 9.4. So we completed 9.4 and 9.5. Okay. And this 9 subsection 3 is connected to exemptions. So that we will start fresh tomorrow. Okay. But last half an hour, we will complete one small topic today. Okay. Some independent topic, no way connected to this. That is, please take e-way bill. Please look into page number 194. Listen here. One small topic, independent topic, we will complete it. See, like this in half an hour, like that and all, if we complete, no. Peacefully we can complete the other chapters, that's why, huh? Please. So listen. E-way bill. So what is electronic way bill means? Before movement of goods, whatever goods you are taking from one location to another location, you need to inform the GST department. For that we need to file one document. that document is known as e-way bill. Okay, and e-way bill is a document filed for the purpose of movement of goods. So when it is to be generated, before movement of goods or after movement of goods? Before movement of goods. So see this, first there should be movement of goods. Is e-way bill applicable in case of services? No. E-way bill is applicable only in case of goods. Is there a movement of goods? No. Then e-way bill is not necessary. And yes, there is movement of goods. Whether the goods are exempted, yes, then also e-way bill not necessary. So e-way bill is applicable only in case of taxable goods, not in case of exempted goods. Exempted goods includes non-taxable goods also. So only when it is a taxable product, we need to generate e-way bill. Now, is it interstate or out of India? No, means within the state. Within the state, we have state-specific e-way bill provisions that we need to follow. And it will not be tested in exam. So in exam, always we will have which provisions related to e-way bill? Interstate movement. Okay. Within the state movement, so we will not get questions because we have separate provisions for within the state. So that particular state will be giving the provisions. Now, suppose if it is interstate. Now, is it job work or handicrafts? Yes, then always e-way bill is required irrespective of the amount. If it is some other goods, e-way bill is required only when the value exceeds 50,000 per invoice. Again, I am repeating, listen. When e-way bill is required, only when the value of goods transported per invoice exceeds 50,000, then e-way bill is required. But there are two products, irrespective of its value, we need to generate e-way bill. What are those two products? Job work, goods sent on job work, and handicrafts. These two cases, always e-way bill is required. Now you may get a doubt, sir, if the value of invoice does not exceed 50,000, then e-way bill is not required, which means whenever the value of goods is more than 50,000, we will prepare two invoices, sir. Invoice number 1 with 40,000, invoice number 2 with 30,000, so that each invoice, it does not exceed 50,000, so no need to generate e-way bill. Correct. You are not required to generate e-way bill. But these two invoices parcel will be transported by the transporter in a single lorry. Na? So now the value of the goods transported in the vehicle exceeds 50,000. So transporter should generate e-way bill. You got it? Even though individually value of goods does not exceed 50,000, so the supplier is not generating e-way bill, but the value of all those goods transported in the vehicle exceeds 50,000, then the transporter has to generate e-way bill. Understood or not? Then, suppose if you are a registered dealer, then the seller will generate e-way bill. If the sender or seller is not registered, then we need to check whether recipient is registered. If recipient is registered, recipient shall generate e-way bill. If both are unregistered, but the product is taxable, supplier unregistered, recipient unregistered, but the product is taxable. You understood or not? So then how sir product is taxable? See, taxability of a product is not dependent on whether the supplier is registered or not. So the product is taxable, but the supplier is unregistered, newly started business. Recipient also unregistered. Then in that case, who will generate e-way bill? Transporter will generate e-way bill. So who will generate e-way bill? If supplier is registered, supplier. If supplier is unregistered and recipient is registered, recipient. If both are unregistered, transporter. Once again, can you repeat? If supplier is registered, if supplier is unregistered and recipient is registered, recipient. If both are unregistered, suppose if transporter says, sir, I don't know how to generate e-way bill. I am not that much educated. If I am educated like you, why I will be driving the vehicle? So then in that case, seller or buyer can generate the e-way bill by enrolling as citizen of India using their permanent account number. They don't need a GST registration. Always e-way bill should be generated. So somehow e-way bill you have to generate. And what is the consequence of transportation of goods without e-way bill? N number of cases are reported. Now, simple here. In that road, one vehicle is going with goods. Now, proper officer, GST officer stop that vehicle. Now, that vehicle contains goods which is not having e-way bill, and those goods are taxable goods. Immediately, the vehicle and the goods will be seized. The vehicle and the goods will be seized, and they need to pay penalty. So, only when they pay penalty, the goods will be released. And what is the penalty? 200% of tax payable. If tax is 1 lakh, how much they need to pay? 2 lakhs they need to pay. Then only the goods will be released. You understood the consequence of e-way bill, not generating e-way bill? Are you getting this? So therefore, ultimately, transporter will simply say, Ayya, I don't know e-way bill. It is your goods. So those goods will be taken by the department. He will happily unload those goods and he will take the lorry and he will go. You understood? Then the owner of the goods will have the problem. So that's why they are telling, even if transporter is not generating, either seller or buyer, enrolling as citizen of India, they need to generate e-way bill. So come on, first priority, supplier is registered, supplier shall generate e-way bill. Supplier is unregistered and recipient is registered, recipient will generate e-way bill. If both are unregistered, transporter should generate e-way bill, else sender or recipient shall generate enrolling as citizen. And in e-way bill, what is the format of e-way bill? Form GST EWB1. Format of e-way bill is Form GST EWB1, and it will have two parts, Part A and Part B. Part A will contain invoice details, Part B will contain vehicle details. Okay. Part A they need to update, Part A they need to fill and generate e-way bill before movement of goods. However, there is a small relaxation for Part B. That is, if it is a intrastate transport distance up to 50 kilometers, within the state, transport distance is up to 50 kilometers, e-way bill not required, e-way bill required. E-way bill required, but Part B is not required. Part B is not required. That too, this transport distance is from place of business of the consignor to the transporter and transporter to the consignee. Okay. So that case, e-way bill is not required or required, but form Part B is not required. Now see this. First, there is a consignor. Where is that consignor? That consignor is located in, say, Chennai. The consignor is located in Chennai, and transport office is in Chennai. Okay, transport office is also in Chennai. Now this distance is, say, 30 kilometers. This distance is 30 kilometers. E-way bill required or not required? Required. E-way bill required. But which one? Part A or Part B? Part A required, Part B not required. Okay. Now, so this transport office Chennai to transport office Bengaluru. Okay. This part you understood? Now, transport office Chennai to transport office Bengaluru. Transport office Bengaluru. So usually they will not pick up the goods at our place. We need to take the goods and hand it over to the transporter's place. Okay. So next to central railway station, lot of transporters are there. Okay. If you want to send goods from Chennai to Delhi, Chennai to Mumbai or anywhere, so you need to go there and hand over the parcel there. So they will be transporting it. Okay. So usually they will transport from transport office to transport office, which means, so our consignee should come to the transport office and take the goods. Is it clear? Where the consignee, our consignee is located? Bengaluru. So therefore they need to come to the transport office and take. So Chennai transport office to Bengaluru transport office, say it is 480 kilometers. Whether e-way bill required? Of course required. And this e-way bill, Part A or Part B? Both. Both Part A and Part B require. Okay. Then again, up to this you understood? Thereafter, from transport office Bengaluru to consignee place. Consignee place in Bengaluru. Because he is not required to be staying next to transport office, na, little far he will be there. And suppose if the distance is 55 kilometers, somewhere in the outskirts he is there. Now, in that case, e-way bill required? Yes. Part A and Part B or only Part A? Both Part A and Part B. What if this distance is less than 50 kilometers? Part B not required. Got the clarity here? So that is this point. Whether it is intrastate transport distance up to 50 kilometers, filing of Part B not required. And what is the time limit within which Part B, that is the vehicle number, we need to update? From the time we updated Part A, we entered Part A, within 15 days, we need to enter Part B. You know what does it mean? Once we hand over the goods to the transporter, we completed Part A, seller completed Part A. Now the transporter should start transporting the goods within 15 days because he need to enter Part B now. I gave the goods to the transporter. How will I know the vehicle number? Who knows the vehicle number? Transporter. Then who should update Part B? Transporter. So means you need to update within 15 days from the time I completed Part A. So update Part B within 15 days from entering Part A details. Suppose if it is my own vehicle, seller's own vehicle, seller will enter Part B. Suppose you are sending your vehicle, in that I am loading the goods and sending. So recipient vehicle, so recipient will enter. Suppose if we are not owning any vehicle, there will be one third party transporter. So we hand over the goods to the transporter. Now who will enter the vehicle number? Transporter. So Part B may be updated either by transporter or supplier or recipient as the case may be. Understood? So generally Part B contains what? Vehicle details. Now look into the next page, validity of e-way bill. Every e-way bill generated will have a validity. So validity means within the time the vehicle should reach the destination. If the vehicle is not reaching the destination within the time, then they have to renew the e-way bill by specifying the reason why they could not reach. If they are not specifying the reason and not renewing the e-way bill, and if the vehicle is caught, it is as good as the vehicle is not having e-way bill and the goods will be seized. Insurance is expiring today midnight, okay, and you went for a second show movie and you came, returned, and when you return, somewhere it is like 1:30 like that, okay. So by 12 o'clock insurance expired. Now you thought, okay, tomorrow we can renew like that. So 1 o'clock or 1:30, police will be there. Normal law and order police also will be there. And that police will stop and they will check the insurance. And the insurance expired. What they will ask? Okay, pay fine. Correct or not? Like that, once the validity of the e-way bill is expired, still if you are transporting the goods, validity expired, immediately put brake, open mobile, renew the e-way bill. You understood? So if you are traveling, then the goods will be confiscated, that is seized. So what is the validity of e-way bill? In case of over-dimensional cargo or multi-mode transportation. Over-dimensional cargo means what? Big lorry. So length will be big. Like they are carrying some turbine parts or aeroplane parts, etc. So that over-dimensional cargo. Or multi-mode transportation. Multi-mode transportation means up to some distance by roadways, thereafter by waterways, thereafter by railways, like that. Multi-mode transportation in which at least one leg is by ship, means waterways. So up to some distance at least we are transporting by waterways. Then the validity will be 1 day for every 20 kilometers or part thereof. For example, 480 kilometers. 480 kilometers, what is the validity? 480 divided by 20. That is 480 divided by 20. 24 days will be taken as the validity. 490 divided by 20. 490 divided by 20. What is the fraction you got? 24 point. So therefore it should be taken as 25. Okay. 485 divided by 20. 24 point. It should be taken as 25. Any part thereof should be taken as the next number. So 24.1, 24.3, 24.5, 24.8, whatever may be part thereof, it should be taken as the next number. So therefore, 1 day for every 20 kilometers are part thereof. In any other case other than above, it will be 1 day for every 200 kilometers are part thereof. Same 480 kilometers. What is the validity? 3 days. How? First 200 1 day, next 200 1 day, remaining 80 kilometers 1 day. So 480 divided by 200, you will get 2 point something. So take it as 3. And the validity of e-waybill may be extended within 8 hours from the time of its expiry. So whenever the e-waybill is expired, validity is expired, from there within how much time we need to renew? 8 hours. And when sir e-waybill will expire, so e-waybill validity will be counted always from the midnight of the day it is generated to the midnight of the next day as 1 day. For example, today morning 10 o'clock we generated e-waybill. Now the validity will be counted from today midnight to next day midnight, 1 day. Then suppose if e-waybill is generated now 6 p.m. then also the validity will be counted from today midnight to tomorrow midnight, 1 day. Suppose if e-waybill is generated night 11:30 p.m. then also it will be counted from the midnight. You understood? So always the validity will be counted from the midnight of the day it is generated to the midnight of the next day will be counted as 1 day. Means e-waybill will always expire by midnight. Correct? 12 o'clock. So therefore what is the time limit within which we need to renew the e-waybill? 8 hours. 8 hours means next day morning 8 a.m. the e-waybill needs to be extended. Okay. So see this. Illustration 1. Suppose an e-waybill is generated at 01 hours for 240 kilometers on March 8th. March 8th, early morning, like midnight of March 7th. And that day only it started. March 8th it started. So now the validity will be for how many days? 2 days. When the validity will end? 8th midnight to 9th midnight, 1 day. Correct? 8th only now we generated. So 8th midnight to 9th midnight, 1 day. 9th midnight to 10th midnight, 2nd day. So therefore the validity will end by 12 midnight of March 10. Always it is advisable to generate e-waybill in the early mornings. So that full day also we have for the purpose of validity. Okay. Then suppose e-waybill is generated at 01 hours for 140 kilometers on March 8, where the goods are transported by over-dimensional cargo. How many days validity? 1 day for every 20 kilometers are part thereof. How many kilometers per? 140. 140 divided by 20, 7 days. So the validity will be counted from 8th March midnight. So 9, 10, 11, 12, 13, 14, 15, 7th day. So therefore 15th midnight it will end. You understood? Then FAQs on e-waybill. When e-waybill is not required, if it is transportation by non-motorized vehicle. Non-motorized vehicle means bullock cart, horse cart, etc. So no motor in that. So then that do not require e-waybill. That animal will die here. That much distance and all we cannot transport. So shorter distance only na. That's why. Goods transported from customs port, airport, air cargo complex or land customs station. See, remember this second point and third point are single point. Goods which are transported under the customs controlled area. What is customs controlled area? Port, airport, land customs station, then inland container depot, warehouse, etc. These are all under whose control? Customs. Between the places if you are transporting, anyhow it is under the control of customs. Therefore e-waybill is not required. So you need to remember customs controlled area. Customs controlled area. Then transit cargo transported to or from Nepal and Bhutan. Nepal and Bhutan are landlocked countries. So goods will be originally imported in India. Then it will go to Nepal and Bhutan. So that movement of goods will not through India only, but they do not require e-way bill because these goods are not for consumption in India. These goods are for consumption in Nepal and Bhutan. Then movement of goods for Ministry of Defence. So Ministry of Defence, if they transport any goods, what goods they will be transporting? Arms or ammunition or any weapons, etc. These goods, if they transport and if they tell which vehicle, from where to where, etc. and all, you will stop that vehicle and steal those weapons and you will again fight against the government itself. That's the reason why that do not require e-way bill. Then empty cargo containers are being transported because there is nothing inside the containers. It's empty containers, so that do not require a e-way bill. Then consignor transporting goods to or from between a place of business and a weighbridge for weighment at a distance of 20 kilometers accompanied by a delivery challan. Simple. A lorry, we take the goods inside the lorry and we need to know what is the weight of the goods. For that we know weight of the lorry without goods. So take the lorry to the weighbridge. Now you know what is the weight of the lorry with goods minus weight of the lorry without goods. You will know the weight of the goods. So for that reason we take the lorry to the weighbridge. So this lorry taken to the weighbridge, if that weighbridge is within 20 kilometers, that do not require e-way bill. Part B not required, e-way bill itself is not required. E-way bill itself is not required. Then goods transported by rail where the consignor of the goods is central government, state government or local authority. What is the difference between 8th point and 5th point? 8th point and 5th point. 5th point is defense goods. In which mode? Any mode. But other than defense, any other state government or central government, it is transported by rail. Then goods specified as exempt from e-way bill requirement in respective state or union territory. So states also will give some goods as exempted from e-way bill. For example, in Tamil Nadu, rice is given as notified goods. Means transportation of rice from one place to another place do not require e-way bill. Like that, states will specify some goods, that goods e-way bill not required. Then some goods are specified by central government. LPG for supply to household and non-domestic exempted category customer. So which cylinders? Household, which red color or blue color? Red color cylinders do not require e-way bill, but blue color cylinders require e-way bill. Then kerosene oil sold under public distribution system. Then postal baggage, that inland letters, postcards, post parcels, that do not require. Natural or cultured pearls, jewelry, goldsmith and silversmith wares. Why? If you know in which vehicle they are transporting all these goods, you will stop that vehicle and money haste season 6. You understood or not? So due to that reason, and I will be professor, you all become the participants. So we will loot. We will see GRT jewelers will be taking in one lorry jewelry and all. So we will loot that lorry and we will go and settle somewhere. You understood or not? Then the C and all will not work out for us. But they will not report. They are not required to report because it is a sensitive data. So in which vehicle they are transporting goods, they will not report. So e-way bill not required. Used personal and household effects like relocating house from one place to another place. So that do not require any e-way bill. Now this will be tested in MCQ. Which of the following cases e-way bill is not required? A, B, C, D. So there it will be tested. This is FAQ 1 is very, very important. Then whether e-way bill is required if movement of goods is not for supply. Whether the movement of goods is for supply or without supply, is it taxable goods? Yes, then e-way bill is required. Let it be under supply or without supply. For example, goods sent on job work is not a supply. And goods taken for sale on approval or on return basis is not a supply. even though it is not a supply, it requires e-way bill. Whether 50,000 limit is for taxable goods or exempted goods, taxable goods. Suppose in a document, if we have both taxable goods and exempted goods, take out exempted goods and see the taxable goods. If the value exceeds 50,000, e-way bill is required. Then, while computing invoice value, whether GST to be included or excluded, we need to include the GST part. Generally, value excludes GST. But in e-way bill provisions, value includes GST. Please keep this in mind. Generally, value excludes GST. But in e-way bill provisions, value includes GST. For example, value of goods is 48,000. 10% GST means it will be 50,400. You understood? 50,800. So more than 50,000. So therefore, definitely e-way bill will be required. Then, who will generate e-way bill? Already we discussed that. Registered person, if the value of goods is more than 50,000. Unregistered person, if the supplier is unregistered and recipient is registered, that recipient, otherwise transporter. Whether transporter is required to generate if supplier has not generated because invoice value does not exceed 50,000. This point also I said. Even though supplier has not generated e-way bill because the value does not exceed 50,000, but the value of all these goods transported in a vehicle exceeds 50,000, then e-way bill is required. How e-way bill will be generated in case of bill to ship to transaction? In bill to ship to transaction, what is bill to ship to transaction means? You are placing an order with me to deliver the goods to your customer. You understood? You are placing order with me to deliver the goods to your customer. So you will be my billing address and your customer is my shipping address. Now there are two supplies. One is between me and you, supplier and the billing address. Second is between billing address and the shipping address. You understood? Even though there are two supplies, but how many e-way bills are required? Only one e-way bill. In case of bill to ship to transaction, one e-way bill is sufficient and it can be generated either by consignor or consignee, even though there are two supplies involved, but a single e-way bill is sufficient. Is there any disqualification for generation of e-way bill? Yes. If you are not filing returns for 2 consecutive periods, you cannot generate e-way bill. Your e-way bill facility will be blocked. Which returns pa? GSTR1, GSTR3B or CMP8. If these 3 returns are not filed for 2 consecutive periods, e-way bill cannot be generated. If goods are transported in public transport or by railways or airways, how vehicle number can be entered? In that case, vehicle number is not required, but they will give one document, airway bill number or bill of lading number. That number we need to enter. Can the goods be transported in one vehicle up to a distance and in another vehicle for the remaining distance? Yes. So, for that no need to generate a new e-way bill. In the regular e-way bill itself, multi-vehicle updation is possible. Okay. So, with this we completed e-way bill provisions. And today what we have discussed is segment 1, introduction to GST. Segment 2, taxable event, that is supply, composite supply, mixed supply. Then we have completed 9 subsection 4 and 9 subsection 5, purchases of a promoter or builder from an unregistered person and supply through e-commerce operator and e-way bill. The agenda for tomorrow, just 1 minute pa. The agenda for tomorrow is a very important class. We will be discussing 9 subsection 3, list of services covered under RCM, and exemptions also we will be completing tomorrow. If time permits, I will also start value of supply. Okay, that's the agenda for tomorrow. Thank you. We'll meet tomorrow. Take care.